doubts on that, you can ask me. Okay, about the targets, because we have about the targets is simple, sir. We haven't talked about the proper entry setup. So I'll be teaching that today. So no worries. Okay, Harshadan saying that you can mark the you can able to mark the can't find the proper breakout structure. Okay, I'll show that. How to fix the target? Yes, there are several ways are there. I'll give you one of the way to fix the targets. So as I told you guys that you can stick with 200 points. 200 points is more than enough for day trading aspect, right? But by using these strategies, you can able to make more than $200 also on every single day. So that I'll explain once again. Let me share my screen. Right. This is Euro USD 4-hour chart. Now I'm deleting everything. Okay. So you can see, simply you can see this is a bullish market, right? Breakout structure. Now I have just marked the breakout structure. I haven't seen anything else. What I've seen here, you can see here, this is a swing point, right? This is my swing point. This is also my swing point. The three candle. This is my swing point. Similarly here, this is my three candles, right? And similarly here, you can say this is my three candles. Now what I'm doing here is I'm just marking this one, the swing point, with the horizontal line. Now what I'm seeing here, my swing point is broken. Swing point is broken here. So I'm calling this as a breakout structure. That's it. Similarly here, my swing point is broken. I'm marking a horizontal line in my swing point, and my swing point is broken by the candle. So I'm calling this as a breakout structure. Similarly here, my swing point is broken, and I'm calling this as a breakout structure. I am in a bullish market, right? Similarly, I can tell you that I'm also having a swing point here, right? First candle, second candle, third candle. This is my swing point candle, right? So this is broken, right? So now I am calling this as a breakup structure. So the downside, till now it was upside breakup structure, but here it is broken downside. Okay, and I'll tell you in this case what you need to do. I'll tell you that tomorrow. Okay. So similarly here, you can see this is my swing candle. So I can tell you this is my breakup structure. Similarly, you can say this is also my breakup structure here. That's it. And you can say this is my breakup structure. When you see this in a higher time frame, like 4 hour or 1 hour, you can able to identify easily. But if you mark this in a 15 minutes time frame, or maybe 5 minutes or 1 minute, you may have the confusions. But the thing is, first you guys need to practice this in a higher time frame charts, like 1 hour chart, 4 hour chart, or maybe 30 minutes chart, or 75-minute chart, whatever the higher time frame, which is whatever the time frame which is more than 15 minutes or 30 minutes. So in that, my suggestion is in that you need to practice first. If you able to find the proper breakup structures in the higher time frame chart, you can also do that in a lower time frame. So don't straight away go to lower time frame, like 15 minutes, 5 minutes. Don't do that straight away. Do that in 1 hour, 2 hour, 3 hour, maybe daily, weekly, monthly charts also you can do that. Okay, so that is how you need to do. So once you can able to find the proper breakup structure, you can able to find the proper supply and demand zones also. Now here you can say here, this is my proper breakup structure, right? And this breakup structure is You can see here, this is my a drop, a base, a rally, right? So this is my my demand zone. You can mark like this. Similarly here, you don't. I mean, after you marking the demand zone, there is no compulsion that price has to come here and go. It can come any point of time. In future also it can come. Not, you cannot expect that price has to immediately come here and react. Right? It can happen because it's 4-hour chart. Right? Similarly here, you can see drop, base, rally. So you'll be marking this entire zone. Right? Now I told you that there is no perfect way to draw these zones. There is no such thing exist. Okay, why I'm saying is, when after the Saturday session, so you don't need to worry about these marking the zones. You will not worry about those things because the zone is nothing. The zone is nothing. It's a certain area where we can expect the entry, but it's all about price, how price is reacting inside this zone. That is important. That is important. By the way, only we are going to take trades. So for now, don't worry about the zones. Just mark the zones. As you can mark, still you can mark like this also. No worries. You can still mark like this. No worries. As of now, I'm saying. After learning the lower time frame entries and advanced price action methods, you will be finding that the zone is not important as the price. Price is very, very important, right? So no worry about that. So you can still mark this as a zone. And here, again, you can see it's a drop, base, a rally. Now you can say that this here it is failed. And I got a one question from Mr. Gaurav today. So he said what mistake I did here. It is a drop, base, rally zone. It's also broken the structure. But why this is failed? Now the thing is, one thing is, we can say that the market is bullish market, but recently it converted into the bearish. You can see here, broken the structure to the bottom. It is converting into the bearish. Maybe that is the reason it is not work. However, you don't need to worry about whether this zone gonna work or not. You don't need to get the confusion because we are not gonna take trade here. I'm again I'm insisting that we are not gonna take trade here or here. We are not gonna buy here. Okay. So we will be doing something here. We'll be confirming the entries. Only then we'll be taking buy entry. Right? In that case, you can still take entry from this bottom. Even though this zone is failed, you would have taken entry from here. After learning the Saturday session, I can promise you that you can able to take entry from here. The zone doesn't matter. You don't need to worry about the zone. Why it does not work? Why? What mistake I have done? You haven't done any mistake. You have marked the correct demand zone, but there is no need that price has to react from your demand zone. It can break also. It can go below and it can go up after that. So our main strategy is we will be waiting for the price to come here and we'll see the confirmation here, and maybe we'll be taking entry from here. After this break, we're taking entry here and we'll be capturing this up movement. So that is possible. So that's why I'm saying no worry, don't worry about the zones, and don't confuse about whether the zone works or not. Should I take entry directly here or here? No, we are not going to do that. We will be taking the refined entries. By the way, we'll be reducing our stop loss. By the way, we are going to take the sniper entries, the picture perfect entries. Okay, so for now, you should know how to mark the zones. It can be like, there is no rule. There is no rule that you have to mark like this. There is no such rules. You can still mark the entire zone. Okay, in our method. So if you learn supply and demand with any other mentors, they will be saying that it should have 7 candles, 3 candles, and you should mark only body part. You should not mark wick. Those kind of conditions X, Y, Z conditions they'll be saying, but I'm not giving you any conditions. Just mark as per your wish. There is no right, there is no wrong here. Because we are not going to take trade directly. We'll be seeing something. That is the key thing. That is the key thing. So you need to wait for till Saturday. Tomorrow and the day after tomorrow will be the most important session. So you guys, I'm telling you guys, you have to be present tomorrow and the day after tomorrow, because tomorrow session and day after tomorrow sessions are the most valuable sessions. So that will determine your uh, that will in that session we will be giving you the most important strategy. So once you practice tomorrow sessions, tomorrow's learning and day after tomorrow's learning with 100% devotion and discipline, I can tell you that you can trade any strategies in the world by combining or that two strategies, which I'm going to teach you tomorrow and day after tomorrow. You can do any you can trade any strategies in the world. Who are teaching? Okay, so don't worry about the supply and demand zones, and whatever I'm going to teach today also, you don't need to worry about that. All you need to understand the concepts, understand how it is works, how to mark the zones, how to mark the levels. That is a minimum requirement. But tomorrow's and day after tomorrow sessions are most important session. Okay, so this is how we'll be marking the zones. We'll be placing the breakup structures. Simple swing points. Just remember the swing points. Swing points are key. Whenever your swing points are broken, suppose your this finger swing point, right? Swing high. The swing high is broken, you'll be buying. If swing low is broken, you'll be selling. That's it. But we'll be selling from the demand zones or supply zones. I mean, we'll be selling or buying from the demand and supply zones, right? Let me see. Okay. Good evening everyone. Okay, let me see one by one. Target, I'll explain today. Venkat sir, I'll explain today. Sir, can you do a quick revision of if possible? Yes, we'll be doing that. So how to know the time frame of the charts? Yes, you can see in this top bar in trading view, right? So generally it won't be look like this. So here you can see there is a arrow mark is there, no? Right? When you click this, you can select the time frame you want here. Select the time frame you want. It will be added here, and you can choose the time frame by clicking this. So just ensure that you are there in a 1 hour time frame or 4 hour time frame. Okay. Okay. Good evening, everyone. Good evening, Praveen Kumar sir. Good evening, John sir. Could you please mark supply and demands on the live market, please? Yes, this is live market, Mr. Kadir. I can tell you, I'm deleting everything. This is my supply zone. Okay. How I am saying this is my supply zone? There is a breakup structure happened. Before that, there is a breakup structure happened to the downside, and this is my supply zone. I will be taking entry from 50% level, or I will be taking entry based on the strategy which we are going to learn in Saturday, right? So based on that, I will be taking entry. Now you can see here there is a rejection. This is a 4 hours supply zone. Let's go to 15 minutes time frame. Now can you see that the rejection here? Price touched here and fell down, right? How many points it fell down? Let us check here. It fell down around 130 points, right? So it is also falling. So you could have taken your sell entry here itself, but again, this is not the way we have to do. This is not the way my strategy works. My strategy will be doing differently. Okay, wait for till Saturday. So you could have taken sell entry from here. And target is the key thing, right? So I have marked this zone in a 4 hour time frame, right? This is my 4 hour supply zone. I want to take sell entry from here. What should be my target? Now the thing is, target can be like 200 points, 300 points, up to you guys. Okay, my personal preference is, if you're a beginner and if you're learning, if you're getting into the market, just stick with 200 points or 20 pips. 200, why I am saying here 200 points thing, people used to promote the courses and promote the forex market, like, you can make $1,000 in a day, you can make $2,000 in a day. And yes, you can do that. I'm not saying that you cannot, it is not possible, yet it is possible. But if you want to make consistent profit, the thing is, one day you can make $500, but next day you may lose also in that case. But but in my strategy, based on my strategy, if you are sticking with 200 points, sticking with 200 points every single day or every single trade. For example, today you are taking two trades, you can stick with 200, 200, 400 points, you can make 400 points in a day, right? So if you are doing like this, if you're doing like this in a consistent way, you will be you will be getting the confidence. At the same time, your account will be grows gradually it will grow, and it will give you the more confidence for you. But if you're and your emotions also will be controlled, it will be in a controlled manner. Even though you have the opportunity to make $500 in a day, just stick with it. Just say that I just need only $200 for today, because market is a 6.6 trillion market, right? Every single day you'll be getting the opportunity, you'll be having the opportunity. Market will not leave you. Every single day you can able to make money. So in that case, just why can't you make base like $200 every single day? Why should, the greed factor is will greed factor definitely will kill you guys, definitely will make you zero in the markets, especially in the market. So don't be greed. uh, Stick with a reasonable winning rates, like 200 points, maybe 250 points. Like, maybe for some people will prefer to capture 300 points every single day. My friend used to capture only 100 points every single day. But his target is 100 points only, because he's saying that it is more than enough for me, right? 7,500 rupees every single day, more than enough. So that is the way you need to design. That is the way you have to develop your psychology. We should not be greed, we should not be panic also. We should not, fear and greed will make us zero in the market. So stick with 200 points, stick with 150 points, stick with 250 points every single day, right? That is the proper way, I can say. That is my personal opinion, that is what I am following. That is what I am following. Sometimes I know that I can definitely get 500 points. In that case, yes, I'll stick with my trade. I'll capture 500 points, 400 points. But most of the time, my target is 250 points. Maximum point is 250 points. That is what I'm doing. But in this case, in reasonable manner, if you are taking sell entry from here, your target should be next swing point. Where is next swing point? This is my next swing point, right? If you are taking sell entry from here, your target should be this. So how much is? It's more than 700 points, right? You should have the patience for that. You should have the patience to run your position till this point. So that is the key thing. So most of the people don't have the patience. So that is the reason I'm saying, just stick with 200 points, 400 points, 300 points, and exit your position, right? But you can also you can go to 15 minutes time frame. Say, for example, if you're taking sell entry from here, right? Now, tell me which one is the recent swing point. You can say, this is my recent swing point, or maybe this is my recent swing point, right? So you can target here. So this gives you 200 points, like 220 points. Maybe here it is 260 points. Now, you can, by the way, you can able to capture quick points, quick profit within 1 hour time frame, right? So you can also capture here, set your target here, the swing points. Swing points are your target points. But for this, you need a lot of patience. You need patience. Okay. Yeah. To 20 pips. Yeah. If you are trading with micro lot, you'll be making $2. Now you may see that $2 is not enough, but say your capital is $10. For $10 investment, you are making $2. It is 20%, guys. 20%, right? And believe me or not, for this $2, how much your effort you are putting? The same effort for $200 also, right? So when you practice this $2 movement every single day, when you comfortable with this $2 every single day, then you can invest more money and you can take many lots and micro standard lots. And you, by the way, you can able to make every single day $200 within 15 minutes, within half an hour time, right? That is what the passive income should be. Once you after came back from the office, you will be having time to trade with the market, right? So you can able to capture 20 points every single day, so 7,500 rupees, 15,000 rupees every single day. That is really really good money, right? But if you're doing this trading thing as a full time, then I can say that then also you can capture this 200 point for every single trade. One day you can take 5 trades. By the way, you can make 1,000 points in a day, right? Or else you can take only one trade and capture entire 800 points, that's 500 points. That is you can do, because you'll be having a lot of time, because every day you will be trading in you're going to trade only, you're not doing any other thing, right? So yes, so if you're an office goer, just stick with 200 points, 20 points, 20 pips. Okay. Yes, you can do the trailing stop loss funds. Mr. John, that when we enter from the higher time frame, you are saying that stop loss will also higher, but no, I'm saying that after Saturday I'll be teaching you how to reduce the stop loss and how you will be taking the picture perfect entry. In that case, your stop loss will be like 50 points, maybe 20 points, 30 points. So your stop loss won't be higher. But for now, it will be higher, right? If you're taking entry from here, yes, it may be higher. Okay. So cool. Shall we proceed today's session? Let me see. We'll see the Bank Nifty chart also. I haven't traded Bank Nifty today because today is Thursday. Otherwise, I would have shared you guys morning itself. Okay. Okay. Please repeat one. Praveen Kumar sir, what do you want to repeat? Entire topic or like? I think we can proceed with today's session, because today's learning also will be somewhat similar to supply and demand, but it's kind of refined supply and demand, I can say, and the logic also completely different. So whatever we learned yesterday, you can use that, or whatever we are going to learn today, you can use that. It's completely up to you guys. You can use that, any of these things. More or less whatever you are going to learn today is also more or less similar to supply and demand, but it has more logic, more sense, so that you will get to know by tomorrow. Okay. So shall we proceed today's topic? Right, thank you. Anybody heard about the word called order block? Anybody know what is order block? Have you ever traded with order blocks? If you don't know, please type no. No one. Very interesting. Oh my god, no one knows. Okay. See, whatever we have learned yesterday, The same concept will be applicable for order blocks also, but order blocks is something different. Order blocks are the smart money concepts. So officially we are learning smart money concepts from today onwards. From today onwards, whatever we are going to learn, it will come under the smart money concepts. Okay. So supply and demand things, it is very popular in the stock markets, and there is a term called volume spread analysis. Anyone knows volume spread analysis? Anyone BSA? Anyone heard about the BSA? Uh, Guys, please give me a time. That Bank Nifty chart, I'll show you, no problem. I'll show you the Bank Nifty chart. Bank Nifty has more different logics we need to include, right? Indian market has a lot of gap up, gap downs, right? So I think it is appropriate that tomorrow, if I show you the Bank Nifty charts, it will be appropriate, because tomorrow we'll be learning so more concepts. So we'll be, when you learn those concepts, right? Only then it is kind of understandable how Bank Nifty is going like this, not right. So don't push me to show the Bank Nifty chart, because Bank Nifty I'll definitely share you. Okay, I am a Bank Nifty trader, so no worries. I will definitely share. Great, guys. Let us continue today's topic. Let us continue today's topic. Let me share my presentation. And some of the things are left over in previous sessions, like shift in market structure and the flip zones, right? So no worries. We'll be learning. Possibly we'll be learning by today, or I'll definitely cover all those things. Okay, cool. Yeah. So we are going to learn trading with institutional order blocks, or POI. POI is nothing but point of interest. There are so many terms we'll be using in the smart money concepts. That POI, AOI, AOI is area of interest, and DP. DP means a decision point. POI means point of interest, right? And there are so many terms are available. We'll be learning those things. So trading with institutional order block. Now, what is order block? What is order block? Now, what is order? Everyone knows what is order, right? Order is buy order, sell order, stop loss order, target order, right? We'll be buying, selling, limit order, target order, right? What is block? Block is a zone, or it is, how can we say that? The order is blocked somewhere. Orders are blocked somewhere. That is why it is called as order blocks. Okay, orders are blocked somewhere, right? Yeah, you can say this as a block or zone, order blocks. Now, what is order blocks? Institutions trade using order blocks. The order block is a specific price range or candle where the institutions will be buying or selling against the retail trend or the dump money. You know what is dump money? We are dump money. Okay, they are smart money, we are dump money. Institutions will be will be taking entries and exit. They will be exiting their positions and entering their positions. It is understandable that they will be taking entries from the order blocks, and they will be exiting from the order block. Okay, it's a price range, or it may be a candle, a single candle, or maybe a range of candles, right? Institutions leave order blocks for themselves to trade at later stage. They will reverse the price to the previous order and then driving the price hard in the direction of the trend. These order blocks, we can also call them as specific levels of either going long or short. Now, it may be confusing for you guys for these definitions. No worries about that. Order blocks are specific candles. You can say that it's a specific candles or it's a specific range from their institution or big money will be trading their positions. Okay. Now, what are the types of order blocks? So we are having a bullish order block, a bearish order block, a breaker block, a mitigation block. We are also having more blocks, but that is not required for today's session. All we need is these 4 different types. Please note down, it is bullish order block, bearish order block, breaker block, and mitigation block. Anybody have you guys ever heard about these things? Have you ever heard about these things? No, right? No issues. Great. No issues, no issues. And we'll be seeing the flip zones also today. And I'll explain everything. What is bullish order block? What is bullish order block? Bullish order block is a last bearish candle before the impulsive up move. Bullish order block is nothing but it's a last bearish candle before the impulsive up move. I will show the example. What is bullish order block? Bullish order block is the last bearish candle before the impulsive up move is called as bullish order block. Okay, the impulsive move should break the previous market structure. What is bullish order block? Say for example, this is the impulsive move. This is the impulsive move. I'll be marking the last bearish candle before this up movement. Last bearish candle. Can you guys see here? This is my last bearish candle before the strong movement. Now you can say that this is my rally base rally, right? But we are not going to consider this one. We don't want this one. Here we are not going to take entire range. We will be marking only the last bearish candle. In this case, this is my last bearish candle. This is my last bearish candle. Before the strong up movement, there's a breakup structure. Okay, now let me show this in a chart. Now, what is bullish order block? Now, here, what is this pattern, guys? Rally, base, rally, right? This is your base. This is your base, right? But here, or you can consider here a rally, base, rally, right? There is a breakup structure. Right? But here we are not going to consider this rally. Here we will be marking only the last bearish candle. Where is the last bearish candle? This is my last bearish candle before the up movement. This is my bullish order block. Only I'll be marking only this candle, and I'll be extending the box like this. I don't know what is happening before. And here you can say that this is my bullish order block, because bullish order block is nothing but last bearish candle before the up movement, strong up movement. Okay. Now, what is the bullish order block here? You have, this is my bullish order block. This is my bullish order block. Okay. Last bearish candle before the impulsive up move. There is a difference, guys. There is a difference between supply and demand zones and order blocks. I'll tell you what is the difference. Okay. Here We will be marking only the strong candles, strong up movements like this. Now, what is bullish order block? Here in this case, this is my bullish order block. I have to say this is my last bearish candle. The wick part is my last bearish candle. This is my bullish order block. And here, this is my bullish order block. The last candle only. I'll be marking only last candle. I am straight away picking the strong up movements. You can see here, this is strong up movements. And here, this is my bullish order block. This is the last bearish candle before the up movement. This is a strong movement, right? And it is also broken the structure. So you can see here, price touched here and gone up, right? So this is my bullish order block. I'll explain this once again. No, there is a difference between supply and demand zones and order blocks. There is a difference. It's a refined form of supply and demand zones, but that is a general example I can tell you now. But the general difference I can tell you now. But when you learn tomorrow's session, you will be learning what is the difference between supply and demand zone and order block. Okay. Tomorrow's session, I'll be including some concepts. When you include those concepts with the order block will be completely different than supply and demand zone. Supply and demand zone is completely based on the supply and demand, like how much demand is there, how much supply is there, how much if price goes up, they'll be selling. If price goes down, they'll be buying. It's completely economic concepts. Okay, but order block is completely smart money based concept. Now, why I'm marking this last bullish candle? There's a logic behind that. Right? If you're marking this as a supply and demand zone, you'll be saying that it's a rally-based rally, right? So in this area, the prices will be equilibrium. Prices will be equal. There is equal number of buyers and equal number of sellers. Like that we have studied yesterday, right? So why we are marking the rangings in supply and demand like this? So for example, this is my supply and demand, right? Rally, base, drop, right? So I said that this is my supply and demand. And why price has to come here? Why price is coming here and touching here? Anybody know why price is coming here? Because at this area, the equal number of buyers and equal number of sellers are there. And when the sellers dominated here, they sold this particular currency from here drastically, and price will come back here and touch here, because now say for example, I told you that it is like a couple of, I think 1.5 years before, there was a huge demand for onions. Anybody knows that there was a problem in I think onion production. The onion prices has went up. Anybody knows that? I'm not sure whether it is for all over India and only for Tamil Nadu. I don't remember that. Yes, it's for they were importing onions from the Egypt, right? Right. But now what is onion prices? Anybody tell me? I don't know. I don't purchase groceries. Yeah, maybe. At the time it was around 150 rupees. Onion was 150 rupees in Chennai and I think Tamil Nadu also. But now it's around 45 rupees, 50 rupees, 30 rupees. I don't know. Like 25 rupees. How the prices went down? At the time there was a drought, or there was a rain, and because of that the onions destroyed. The onion fields were destroyed, right? Because of that, what do you call it? The supply was very low, so demand was very high. That is the reason price went up, right? But now prices went down to 20 rupees, 30 rupees, 40 rupees, right? What happened here? Here supplies become more because people are producing the onions every single day. So supply is increased, right? So that is the reason prices is going up, going down. So supply and demand is completely based on price, completely based on price. But order blocks, it's yes, of course, it's also following the price. But order block, in the concept of order block, the smart money involved in the order blocks. That is a major difference between supply and demand and order block. Supply and demand purely economic concepts, purely price and supply and demand of the product, supply and demand of the euro USD, supply and demand of the uh, stocks. Now, one thing I would like to tell you guys, Forex market does not have real volume. Anybody know what is that means, real volume? Forex market does not have the real volume. Just like stock market. Stock market has a volume. Now, what do you mean by volume here? No, quantity. Now, I'll give you the example here. Say, for example, Reliance is issuing IPO. IPO means initial public offer, right? Everyone knows that. So Reliance will be saying that I will be issuing 1 lakh shares in the market, 1 lakh worth of shares. So people will be buying that shares. Right? After issue of 1 lakh shares, everyone will buy the Reliance shares. Right? Now, what is the volume of the Reliance? 1 lakh shares, right? 1 lakh shares. The volume is 1 lakh shares because we are having the possession of Reliance stocks in our demat account. The Reliance stocks, say for example, you bought 100 stocks, so you are having the ownership of the Reliance worth of 100 shares worth of ownership you are having, which means you have the possession. So it is like when you go to vegetable market, when you purchase potato, you are giving the money and you are physically having the possession of the potato, right? So this is what we are calling is the volume. The stock market has the volume, but Forex market doesn't have the volume, which means when you buy Euro USD, are you having the Euro USD in your hand? Right? You are not having the currency. Right? You are just gambling or you are just speculating. Market will go up or go down, right? But if you are go to anywhere abroad, like Dubai or America, Australia, right? In that case, you will be exchanging the Australian dollar for Indian rupees, right? Or Indian rupees for Australian dollar. You'll be doing that. In that case, you will be possessing you will be having the currency in your hand in the form of ATM card or in the form of physical currency, right? But here you are not holding the ownership of these currencies. So that is the major difference. Forex market does not have the volume. Wherever the volume is there, in that areas only supply and demand will be applicable. Wherever the production is there, only then you can say that there is a supply is there, there is a demand is there, right? Because of the low production, prices went up. Because of the higher production, prices went down. Right? Production of onions, for example, in the case of onions, right? So that is the difference between. That is why the supply and demand concept is not applicable to the Forex market, but you can still use the concept. Still use it is working. There is no, even though there is no real volume in the market, but still it is working. But it works really well in the stock market. That's why I told you guys about the volume spread analysis. There is a volume spread analysis, separate strategies there that is dedicated for supply and demand trading, completely dedicated for supply and demand trading. Okay, so here we don't have the real volume, and in that case, how you can determine this is the this particular currency has the lower price, and it has the, it is a supply zone, it is a demand zone, and you can able to sell from here because of the price. You cannot do that. So here it is completely different, for especially in the forex market. But in supply and demand concept, you can apply this concept in the stock market, and other markets also, commodity market also you can use. So that is the reason I have teach you guys, right? Okay, that is a major difference. Okay. No, the thing is, this is my supply zone. This is my supply zone, right? Let me delete everything. Let me see, is there any demand zone is there or not? Now here, let's see if there any demand zone is there. Now, everyone, please see here. This is my drop. This is my base. This is my rally, right? So my entire zone below is the supply zone. Sorry, demand zone, right? It is failed. Just that is doesn't matter. Demand zone. But when I mark the order block, I will not mark entire zone here. I will be marking only the last bearish candle. I will not mark this entire zone. And I don't see this drop, base, rally. I don't want these and all. I don't care about whatever happened in the previous. I just care about the last bearish candle and the strong bullish movement. And it should break the structures. Right? I just care about only this level. By the way, say for example, here it is failed, but if it is worked, then your stop loss will be reduced, right? Your entry will be here. Your stop loss will be here. Now just compare with these zones and here. Right? This would be 300 point stop loss, and this would be relatively low, right? 180 points, half of the percentage, right? This is my, what do you call it? This is my, the bullish order block. I won't be marking entire level. So here in this case, you can see here. Now you will be saying that this is my rally, base, rally, right? But I don't want to do this. I'll be marking only the last bearish candle. Here, what is my last bearish candle? I can say this is my last bearish candle, right? And I don't care about these things. And here, this is my last bearish candle, right? Okay. So I'll be taking buy entry from here or here, maybe here. Here I'll be taking buy entry from here. Okay. I don't care about the rally base rally, drop base drop, rally base drop. I don't know. I don't want to do that anymore. Okay. So again, this is completely up to you guys. You can follow that also. You can follow whatever I'm going to teach today. That also, it's up to you. It's up to you. But these, whatever we are learning today and whatever we learned yesterday is not important. Whatever we are going to learn tomorrow and day after tomorrow, that is important. Okay. This is completely different strategy and completely different logic also. There, what is the logic here? The logic here is why this is called why this last candle is called as a what do you call it? The bullish order block. Why we are calling here as a bullish order block? Right? The thing is, it is understandable that in this area, now you can clearly see here. Do you guys agree with me? This is my breakout structure. Maybe you are not agree, right? Because there is a wick only there, right? There is a small wick only there, correct? But if you go to 15 minutes time frame, or maybe different time frame, you'll be seeing the candle break. Let me see. Oh, sorry. I don't know where it is went. No issues. Let's see the recent one. Yes, Saikmar sir. That was the correct thing. Abhiram sir, you said imbalance is created. Absolutely correct. That is tomorrow we'll be discussing. Which means you already knows the order block concepts. Didn't you? Now you can see here. This is my strong bullish movement, right? This is my strong bullish movement. Now this bullish movement is broken. You can see here also. This is a perfect one. There's a breakout structure, right? And there's a strong bullish movement. Now you can see the big candles, big chunk candles, big fat candles. Now I'll be marking the last bearish candle like this. This is my last bearish candle. Now I'm not taking this entire zone. If I take entire zone, I'll be taking like this, right? I'll be taking like this. So here I'll be taking only the last bearish candle, only the last bearish candle. Now we'll be doing lot of other things also will be including here, so that I'll be teaching tomorrow. So this is my bullish order block. I'll be extending this box and I'll be waiting for the price to touch here. Now see here, here it is touched, given you some small points, around 200 points it's given you, and here also it is touched, it given you 100 point 100 and 160 points it's given you. Yes, it depends upon the time frame also. If you're marking in a 1 hour time frame, 2 hour time frame, you'll be getting the more advantage, like more points you'll be getting. Also you need to mark that is in a bullish scenario, right? So that is also important thing you need to understand, right? Let me, okay, let me share this one more time. So what is bullish order block? Bullish order block is nothing but the last bullish candle before the up movement. In this case, here, this is also bullish order block. I haven't properly marked it. This is also bullish order block. Now you can see here, this small area, this is perfectly touched here, right? Because this is the last bearish candle before the up movement, right? If you mark as the rally based rally zone, you will be marking this entire zone, correct? You're marking this entire zone as a demand, in your as a demand zone, right? Okay. Now, why this level are important? Why this is important level? That is a key. That is we need to understand. Why we are saying, what is the difference? Why we are saying this is my key level? Why we are buying from here? Why prices are coming here? After, why, see, after this levels, why prices are coming here? Let's see one example. For example, this is my order block, right? This is my last bullish candle, last bearish candle before the bullish movement, right? Twice it is respected. You can see here, breakout structure, right? This is my order block. This is my, after the price touched here, gone up, and price touched here, gone up, right? It given me very good points. Second, third time also it touched here, gone up. Why prices are coming down? Why prices are coming down? Anyone knows why prices are coming down? After this strong up movement, why prices are coming down? This is my strong up movement. Why prices are coming here and touching? Why this is happening? Why this is happening? Why this is happening? Anyone knows? Any guesses? Okay, profit booking, excellent. To balance the order, great. Fulfill the pending orders, recovery, retracement. Retracement is also one of the reason, right? I'll tell you why prices coming. Yes, whatever so far you have said is correct. Low sellers, maybe, yeah. Buying and selling based on supply and demand concept, you can say that it's buying and selling. So nobody's ready to buy at higher price, so price is coming down. See, onion prices went to 200 rupees, so nobody's ready to buy. Then after that, vendors reducing the onion prices to slowly, and then onion prices coming to 50 rupees, then everybody started to buy. So that is completely supply and demand, right? Supply and demand. But here, why prices are coming? You said that someone should have, some people would have bought here, right? Some people bought here, bought here, bought here, bought here, bought here. So bought here also. So they are booking their profit. They are closing their position, right? So that is the reason. Whoever bought here, they are selling here. Selling here, that's the reason price is going down. Price is going down. That is one reason. Second reason is higher prices as per supply and demand. Okay, and some of you guys said the filling the balance orders. Absolutely correct. That I'll come to that point. Okay. Now the thing is, it is understandable that why we are marking last bearish candle. Why we are marking last bearish candle before the strong bullish movement? It is understandable that in this last bearish candle, the smart money is sold their positions. In this last bearish candle, the smart money is involved. And this big green candle, also the smart money is involved. Now just see here. I'm deleting everything. Just see here, guys. This is my last bearish candle before the bullish movement, right? Strong bullish movement, right? Now, just see this candle. How big this candle? It is big candle, right? It's a big candle. Now, let's see different example, proper example. Yeah, we can see this one. This is a small one. Let's see some. Let's see here. There's a bearish example. Let's go different pair. Euro AUD. Some exotic pair, minor pair. So market is bearish. Yeah, let's see here. This is a perfect one. Now, can you guys see here the last bearish candle before the strong up movement? Right. Now, why we are marking this last bearish candle is because it is understandable that the smart money is sold their positions here, and the smart money is bought the positions here. They sold here, they bought here. It is understandable that. Okay. So if you sold here as an individual trader, if you sold here, right, what would be your status now? You'll be losing everything, right? Your stop losses. If you are selling from this candle, say for example, here you are selling, you'll be putting your stop loss here, right? So what will be your position now? Your stop loss is hit. You lost your money, correct? Right. And what about smart money? They are also sold here, right? And they also, it is understandable that they bought here and they sold here. What about smart money? Their stop losses also hit, right? Yes or no? Anyone? Please tell me, yes or no, guys? Smart money also lost, right? No. That is the thing you need to understand. No, smart money never places stop losses. They don't trade like us. I told you guys, smart money is not just an investment company or trading firm. They are governments. They are central banks. They are reserve banks, right? They are the custodian of the currencies. Okay. They are printing the currencies. They are printing the currencies. So they are holding the currency, physical currency. So if they are selling here, they are actually selling. Okay. They are actually selling, which means they are exchanging currencies. They might be exchanging for other currencies, other countries' currencies. Okay. They are not placing stop losses. They are physically owning the currency. They are circulating the currencies. Okay. So they sold here, they bought here. Now tell me, even though if now let's come to the investment companies perspective. There are so many investment companies, so many private banks also trading, right? Like ICC Bank, Citibanks, and JP Morgan, Goldman Sachs. So there are so many investment companies also trading in the market. Just leave the central banks. We don't want to learn about central banks or government. Just leave for now. Some mutual fund companies, insurance companies, they are also actively participating here, right? They also don't put their stop losses. Just remember that they don't put stop losses. They sell here. Why they are selling here? They are creating that the market gonna down, market going to be fall. They are creating the imaginary, or they are trapping people like you and me. People like you and me. They are showing that market gonna down, right? So when you see the down candles, when you see the breakup structures, maybe in this case you are seeing the breakup structure, right? And you may have the breakup structure here also. And for example sake, I'm saying, as soon as you see the breakup structure, what you will be thinking? Okay, market broken the structure, so I'll be taking sell entries. So that is your mindset. But what happens here? Immediately they will bring the price to upside. Immediately bring the price to upside. Now they are trapping the peoples. Where exactly they are trapping? They exactly at that last bearish candle. Last bearish candle, right? And yes, thank you, Mesha. And one more thing, they are the one can able to create the big candles. We cannot create the big candles. This candle we cannot create, guys. This big candle, even though it's a small candle, this we cannot create. Even though you have 10 crores or 100 crores, you cannot create this movement, down movement. You cannot do this. They used to do, they like the 10,000 standard lot they will be selling immediately, or 1 lakh standard lot they'll be selling. They have the power, they have the money, right? Okay, so they are creating this candle, and after that they are moving the candle. Now why this price is coming down here? Now they have sold here, right? They have sold here. If you are there, your stop loss will be hit. You'll be losing your stop loss, and you'll go and sleep, or you will go and cry also sometimes, right? Because I lost money. Market is gambling. Market is speculative. My broker is trapped me. My broker knows where I place my orders, right? These are the things people used to say, correct? My broker knows my where I am placing my orders, so my broker trapped me. Whenever I place orders, my stop loss is hit. Whenever I place my stop loss, only my stop loss is hit. But after hitting my stop loss, it is going to my desirable direction. So they are trapping me, they are cheating me. That's why I don't trust this broker. That is what you people thinking, right? But actually what is happening here is, broker is not trapping you, or even the smart money is not trapping you. Smart money will trap you only if they have benefit. Only if they have benefit, right? So now why the price is coming here? Now I told you guys, here the smart money is also sold. So they say, for example, I'm saying, for example, in this particular candle, they have sold 1,000 standard lot. For example sake, I'm saying 1,000 standard lot. Okay. And the next candle, they bought 10,000 standard lot. Okay. Now this thousand lot will be negative, right? Loss, right? So since they don't put stop loss, so this $1,000 position will be in the minus position, right? Negative position. It is in the loss. But this $10,000 will be in a profit, correct? 10,000 standard lot will be profit, right? So they don't leave this $1,000 for like just like that. They don't leave this thousand standard lots. They are not running the charity. They are not doing this donation thing. So they will eventually bring the price to downside, and as soon as it is touched, they will close this 1,000 positions. They close this 1,000 position, and they will be in a break even here. Here they will be making break even, or maybe little profit they will be making, right? By the way, the sell side they will be taking profit, and buy side also they'll be taking profit. That is the reason prices are coming down. not because of supply and demand. Just remember, not because of supply and demand. Okay. Yes, they'll be creating inducements. They'll be induces. They'll be play with our emotions. That is called inducement. We will be covering that tomorrow. Okay, in a detailed manner. No worries. Whatever we learn, just it's a preview for tomorrow session. Pullback is it's why pullback is happening. It's because of they want to recover their losses, not our losses. They will be recovering their losses, right? Now let's see few more order blocks and order blocks. Let's complete that first, then I'll come to that point once again. Okay, this is the bullish order block thing. You need to mark the last bearish candle before the up movement. Okay, what is bearish order block? Similar to simple, the same thing is opposite. Last bullish candle before the impulsive down movement is called bearish order block. Now you can see here, this is my last bullish candle before the strong down movement. This is a perfect bearish order block. Right? So after that, what happened? Price coming. Now you can see here the last bullish candle, how big this candle is. This is a very big candle, right? So we cannot create this big candle. Smart money only is creating this big candle. These two candles are created by the smart money. They have involved here. They have purchased here, right? So they purchased here and they sold here. They sold here. Now their selling position is profit because they sold here and prices went down and they booked their profits here, somewhere here. Okay. But this buy position is still open. Still it is in a negative position. Now to recover that loss, what they'll be doing is they'll be simply taking price to upside and they touch here. As soon as it touched here, they'll be closing this buy position. Closing this buy position. That's why this down candle is happening. Okay. So this is called bearish order block. I'll give you some example. Then I'll explain this. What is this in a detailed manner. So let me go to different chart. XAUSD. See the gold. Okay, here what is my bullish order? Let's go to 1 hour time frame. Now, just see here. This is a rally-based rally zone, right? Rally-based rally. But if you see here in the bottom, this is my order block. This is my perfect order block. Okay, you may ask, I don't have the proper breakup structure. I can still consider this as a breakup structure. Okay, there is no need to consider always it has to be there here or not. You can still consider this as a breakup structure. Okay, and again, let's see here. I have one more breakup structure, right? And this is my order block, last candle. And you can, in this case, you can consider these two candles also, because I can see the continuous red candles, right? When you see the continuous red candles, then you can consider this continuous red candles as a bearish order block. Here I have only one red candle. So this is my order block, the last candle. But here I see continuous two candles. So I'm considering these two candles as my order block. Okay. So here the selling activity, they sold here. Now, if you pay attention to the market structure here, do you guys agree with me? This is my breakup structure. This is my breakup structure, guys. Yes or no? BOS, this is my swing point. It is broken, right? Right. So you'll be thinking that, okay, this is my breakup structure. So I'll be taking sell entry because it's look like a drop, a base, a drop. Breakup structure happened. Here also breakup structure happened. Right? Maybe here. This is the breakup structure. This is my breakup structure. Right. So you'll be thinking that I'll be taking sell entry from here. But what happened? Prices went away. So they trapped you guys. They trapped here. I'll be teaching you guys tomorrow how to identify these traps. Okay, no worries. So they trapped here and bring the price to upside. Now they sold here, they purposefully sold here, and they purposefully bought here, right? Whatever they bought, they are in a profit. Whatever they sold, they're in a loss. So they need to recover that loss. For that purpose, they will eventually bring the price to downside, touch here. That is the reason prices are retracing. It is not because of supply and demand. It is not because of the supply and demand concept, or because of the what else, uh, like support turn resistance. It is not because of that. Here, purely smart money involved, because we cannot create these big candles. We cannot create, especially in the forex market. Okay, so this is my bearish order block. Let me see. Okay, we will be discussing those things. Okay, let me see. Where can we enter the open position? Yes, I'll tell you that. I'll tell you that. Okay. Now, the difference between S&D and order blocks. What is the S&D and zones and order blocks? What is the difference? Visually, both supply and demand zones and order blocks look same. However, there is a minor difference. So supply and demand zones are generally formed in a ranging markets. So it will be like entire range, whereas order blocks is the most refined form of supply and demand zones. However, the logic wise, both are different. In supply and demand, we will be taking trades based on what do you call it? The price movements, right? If the price is higher, then people will be selling. If price is lower, then people will be buying. That logic is involved. But order block is, it is completely that smart money is accumulating order here, or smart money is trading there. They are involving there. They're involved in that. That is the reason the market is going. It is not because of supply and demand. Because of the big players trapping as big player playing there. That is the reason we are calling them as an order block. Right? So supply and demand is it's completely based on economic concepts like supply, demand, price, equilibrium price. That's, but order block is more logical than supply and demand. It is completely understandable that the big players are playing from that certain levels. Okay, especially in the forex market, because forex market don't have real volume. That's why I'm saying. Okay, now this is the one thing we need to understand before we continue further understanding the orders. Now we have covered this. Uh, we have the buy order, sell order, right? Stop loss order, right? Now I would like to ask you guys one question. For example, if you are buying, for example, you are buying from here and putting 200 points somewhere, you are setting your target here. Now, what is this, guys? Here you will be buying, right? Let me take horizontal ray. This area will be buying, correct? And this area you'll be putting your stop loss. And here this is your target, correct? Now, what is buy order? Buy order means you're buying, correct? What is stop loss? What is stop loss? Anyone know what is stop loss? And what is your target? No, I'm talking about, yes, Akash has said correctly. When you buy, what is your stop loss order? Stop loss is a sell order, correct? Stop loss is a sell order. What is your target? What is target order? In that case, targeted order also is sell order. Correct? Everyone understand this? When you buy here, what is your target? Target is a sell order. And what is your stop loss? Stop loss is a sell order. Everyone agree with me? Correct? When you sell, say for your target is this, right? What is your stop loss? When you sell, what is your stop loss? What is your target? Stop loss is a buy order, and target is buy order. Now I'll explain this once again. For example, which case you will be, say for example, the stock price is 100 rupees. Okay, 100 rupees. For example, you are buying at 100 rupees. Okay, you are buying at 100 rupees, particular stock, ITC stock, or Coal India, or maybe NTPC, whatever stocks it can be. 100 rupees you are buying. So what should be your target? Like 110, 120 rupees, right? That should be your target. So for example, here you are saying that you are buying at 100 rupees and your target is 110. When price reaches 110, what you will be do? What you guys will be doing? You bought at 100 rupees, and when price reaches 110, what you will be doing? Venkat sir, you can respond, because you asked, you told me to repeat, right? What you'll be doing? Those who don't understand this, please respond. You will be selling, correct? So your target is nothing but sell order. Correct? Absolutely correct, Venkat sir. Right? Similarly, you are buying at 100 rupees, but you have the insecurity that, okay, I don't know whether this buy order going to work or not. So in that case, I'll be putting stop loss 5 rupees. Like if price goes below 95 rupees, then my order has to close, correct? So you'll be putting your stop loss at 95 rupees. And what is that stop loss order? It's a sell entry. So just pay attention. When you buy one order, you are putting two sell orders, one in the form of stop loss, one in the form of target. Okay. Similarly, when you sell one standard lot, micro lot, mini lot, whatever it can be, one standard lot, in that case, you are putting two buy orders, one in the form of stop loss, one in the form of target. Okay. Now, this is a very important thing you need to understand. Okay. Tomorrow also we will be covering this. Right. Now let me go to the chart presentation. So what is buy order? If a trader expects price to go up, then buy order will be executed. Right? What is sell order? If a trader expects the price to go down, then sell order will be executed. Right? What is target order? When trader places the buy order, his or her target order is nothing but sell order. When trader places sell order, his target order is nothing but buy order. Okay. Similarly, stop loss. When trader places buy order, his or her stop loss is nothing but sell order. Okay. When trader places sell order, his or her stop loss order is nothing but buy order. Just remember these points. These are the points really important for tomorrow's session also, today's session also. Right? Now, placing order, I think we have covered this in the first day session, how to place order, buy, sell, and in the MT4 platform, right? We'll be buying like this. I told you the guys in the first day session, so that is not required. Okay. Now, mitigation of order blocks. This is the important thing. This I have covered a little bit while we are talking about the order blocks. So, what is mitigation? Mitigation of order block. Mitigation is the process of reducing risk. Reducing the risk. Okay. When price touch the order block, we call that as a mitigation. Okay. When price is coming down, wrong? Say, for example, this is my order block, bullish order block, right? When price comes here and touch here, no, this is called mitigation. Mitigation. Just remember this word is called mitigation. Okay, right? So I'll be explaining about the buy stop and sell stop thing. Plus, for now, just understand the concept. Then we'll be discussing about that. Okay. So when price touches this order block, that is called as mitigation. Mitigation. Okay. Now, why price is coming down? It is understandable that smart money make their transactions near the order block. Near the order block, they are buying or selling before the near this order block, like this cell, let me share the proper mitigation point. Okay, let's see here. Let's try different pair, or maybe okay, let's see here. This is my order block. Why I choose this last bullish candle, bearish candle, right? And you guys can see price is mitigated a little bit. It's mitigated slightly, touched it slightly here and gone up. Okay, so I can say that the order block is mitigated here in this area. It is mitigated, slightly mitigated and gone up. Okay, in future also it may mitigate it also. Let's see here. Okay, this not it came here, right? Now this is my, there's a breakup structure. I'm seeing the breakup structure here, and I have marked the order block here, and price touched here and gone up. Should have. Okay, or else you can see here there is a breakup structure. There is a last bearish candle. This one is the last bearish candle, and price touched here, price mitigated here and gone up. Okay, now this down movement, you will be calling that as a retracement, right? It's an impulsive move, retracement. But here, why this retracement is happening because of reducing their risks, reducing the risk of the smart money, because here the smart money sold. Here they have sold, and immediately they bought from the next candle, and they have broken the structures also, right? So to avoid this loss, they are bringing the price to downside and touching here. Okay, this is called mitigation. Okay, now for example, smart money buys huge lot near OB, and prices will go up fastly, and during this impulsive move, the price chasing retailers, just note this point, the price chasing retailers also enter the market with their stop loss. Okay, price chasing retailers also entering the stop loss. For example, this is strong up movement, right? This is strong up movement. Strong up movement. Now, tell me guys honestly, I need a honest answer from everyone. When you see this strong up movement, will you buy or not? As soon as you see the honest, as soon as you see this strong up movement, will you buy or not? Yes, everyone would have done that, right? Yeah, I'm seeing very strong bullish movement. Buy. Immediately we'll be buying, right? Momentum trading. Yeah, my MACD, my RSI becomes oversold area, overbought area. I mean oversold area. Then I'll be buying, and I see prices above QQ indicator. QQ indicator giving me the signal. We'll be buying, right? No, I'm talking about the realistic scenario. When you started as a trader, We would have bought. I have done that. There is no denying it. I have done that. So we are, when we do that, we are called as price chasing retailers. We are chasing the prices. We are chasing the prices. Okay. Here we are chasing the price. Here we'll be entering in this area. I'll be taking buy, and there is a breakup structure, and I'll see that break and retest, right? My resistance is broken, and I'll be buying. You'll be buying here. Some people will buying here, and some people will wait for the this break and retest thing, right? Pullback trading. They'll be waiting for the pullback trading. So they'll be waiting for this pullback, this down movement, and they'll be buying from here also. They'll be buying from here, somewhere here also they'll be buying, right? Now, honestly speaking, most of the time we don't put stop loss at this scenario, right? How many of you guys put stop loss when you buy, when you chase the price? But I did stop loss. I have done. Most of the people don't put SLS. They don't put SL, but some people will also place SL. Yes, I have also done that without putting stop loss. I have also blown my account. Okay. Now the thing is, this movement, I told you guys, this movement is created by the smart money. This is not, we cannot create. This is created by smart money. In that case, smart money bought, and you also followed them. You also chased them, right? So in that case, you are giving irritation. You are making them as a fool, because you are sharing their profit, right? You are sharing their profits. They got irritated with this. They'll be getting irritated with this because they put 1,000 crores, 2,000 crores, 3,000 crores to create this up movement, but you are just putting your micro lot with the $2.5, and you are also trying to capture $2 or $3 in this moment. Or you are only have 10,000 rupees, and you are bought one standard lot, and you are again involving in this competition with them, and they get irritated with this, because most of the times people are chasing the price, and they don't like this, because you are sharing their profits, right? Even though smart money has a huge capital, and they uh, they physically, I can say only 5% of people are smart money. Remaining 95% of people are retail traders like you and me. So even though retail traders don't have the strength to move the market up, they still have the money, right? So for example, at a time, all around the world, every retailers started buying, then they are taking a considerable amount of money from the smart money. So they don't like this. Smart money don't like this. And also smart money have the losing position here, because they sold here. Losing position, number one, they are having losing position here. Number two, the price chasing retailers also being the part of this market. So they don't want that. So for that reason, what they'll be doing is, they'll be simply bring the price to downside. By the way, they will be taking their stop losses first. They'll be taking their stop losses first. If you guys didn't put your stop loss, then they'll be taking your entire money, entire capital from your account. They'll be taking your money, and eventually they will touch this order block, and they will close this position also. Now price will go up. Why it is going up? Because they are closing the sell position, right? When you close your sell position, it becomes buy order, correct? When you close your sell position, when you close your target, it is buy order, correct? So when they close 1,000 or 10,000 buy orders here, it will become, I mean, a sell order. sell order here, it will become buy order. So that's why price is going up, right? So these are the two reasons price is coming down and going up. Okay, everyone understand this? Everyone understand this? You want me to repeat? Are you getting the logic? Because this is most important logic you need to understand. Want me to repeat? Okay, I'll repeat this once again. No problem, no problem. I'll repeat this once again. Now, yes, absolutely, we are getting fooled, guys. We are getting fooled. Now, I'll ask you one question, guys. If you are opening with any broker, you take Indian market itself, the broker will be teaching you some free strategies, right? They are teaching the free strategies. Nowadays, you can open YouTube. So many brokers are teaching you the free strategies. So many people are teaching free strategies. Now, tell me one thing. Tell me one thing. If any strategy which is publicly available, will that strategy works? Do you guys think it works? It works, of course. Sometimes it works, but the big players also know this, right? The big players also know this. They know each and every strategy. The smart money, the smart money knows each and every strategy the retail traders using. They know that. They know how the retail traders will be trading, where retail traders will be trading. Whenever retail traders see the double top, double bottom, they will be buying, selling. Right? They know that. News events, they know that. News events is created by them only. Right? Say, in a fundamental analysis, we'll be the stock traders will be trading the stocks based on the results, right? Fundamental analysis. There's a called fundamental analysis there. So today the ICICI Bank given their result, positive results. So today market will be bullish. And State Bank of India given their results, their balance sheet is given. So they'll be there is a negative news. So there will be bearish. Like that, the NDTV profit, CNBC Awas, and Business Line, Economic Times, those papers and all giving you the information, right? But I'll tell you one thing, guys. I'll tell you one thing. The balance sheet and profit and loss account of every company. Okay, see, I am running a company. I am a owner of the Reliance, say for example, saying I'm not a owner, but I'm saying I'm a managing director of the Reliance. Okay, I know what is my profit. What is the profit? My auditor knows my profit. My CFO knows my profit. My finance manager knows my profit. Right? So they know the information before you guys know. Right? So after everything they know, after 1 week, 2 weeks only, they will be issuing the information to the news media. So news media will be publishing that information. So before that itself, the company insiders and company stakeholders, right? Vendors, customers, they also know these informations. They will be trading. They will be trading. So, but you guys will be knowing only today morning. But the profit and loss, the trading based on profit and loss information news would have been done a couple of week itself. There will be insider trading also will be there. So anything publicly available which is not gonna work. Yes, it's gonna work sometime because they don't want you guys to completely know about these smart money things. Because if you are trying the EMA strategy, if you're trying the QQ strategy, if you're trying the support and resistance strategy, every time your strategy fails, then you will awake, right? Okay, something is happening, somebody is playing, so you'll be awake. So they don't want you to awake. So that's the reason sometimes your strategy works, sometimes your strategy don't work. So they are giving, sometimes they deliberately lose money, sometimes, right? Sometimes you deliberately Sometimes the smart money deliberately lose money. Sometimes they will deliberately trap you. So you will be saying that my support and resistance strategy works really fine, but it has 60% winning rate, right? Which means it may not also work sometime, right? So when you understand these things clearly, you can able to escape from that manipulation, escape from that the smart money's trap. Now let me explain this once again, as you guys asked. Let me delete everything. Now everyone agree with me, it is my bullish order block, right? It is my bullish order block, right? Right. Now I told you guys that when we have the breakout structure like this, so we will considering this as a valid order block. Okay. Now why this is a valid order block? Because smart money bought these candles. These two candles was created by smart money, which we cannot create because we don't have the money, right? And similarly, why we are marking last bearish candle? Because this candle they sold here, they created that. Okay, market gonna down, they created, purposefully created. See, you can see here in this movement there is a two down candles, right? Two down candles, and it is also broken the structures. So you'll be thinking that okay, market gonna down, and next candle is bullish candle. So, and you will be thinking, okay, market broke the structure, and retracing from there, it will go down. Like that, you will be thinking. Correct? Everyone understand this part? So when you see this one, what will you be thinking? Okay, I have a breakout structure here. I have a breakout structure here. Right? Price is broken and it is retracing, right? Retracing. Here you will be having, here you are having the order block, right? This is also order block. This green candle is order block, selling order block. Now, let me show. This is my order block, right? Last bullish candle before the down movement. So you will be thinking that, okay, I'll be taking my sell entry from here because I have a breakup structure. I have a retracement. After retracement, I see the down candle. So next candle, so I'll be selling. So you will be selling from here. You'll be selling from here. But after that, what happened? Price just gone above. Okay, so this red candle is created by the smart money. Okay, everyone understand till this point? Everyone understand this till this point? Yes. Okay, those who said don't understand, please respond in chat. Okay. Now, everyone agree with me here exactly at this candle, the smart money sold. Smart money sold. Everyone agree with me? Okay. Now I'll be repeating this once again. As you want me to repeat this once again? Okay, I'll be repeating this once again. I'll be deleting everything. Now tell me, guys. Everyone agree with me? It's my breakup structure. Yes. Just type in chat box. It's a breakup, right? And everyone agree with me? It's a rally base drop, right? Rally base drop. So we'll be marking this as our supply zone. Let's think about this supply zone, or you can call this as an order block also, right? Supply zone. Now what is your bias? Sell bias, correct? So what you'll be doing? You will be selling because you see this. You'll be selling when price touch this level, right? So you sold here. You guys sold here, and it given you some points. But after that, what happened? Price went down, and immediately it's gone up. Correct? Immediately it's gone up. Right? Now, what I'm saying here is, here in this candle was purposefully created by the smart money. they they make you guys like market gonna down because it's created the order block here, supply zone here, and supply zone is touched, prices fell down, right? You will be taking sell entries here. And this down candle was created by the smart money. You need to understand that. How, when will you know that? When will you know that? You will be knowing that after seeing this strong bullish candle. Your stop loss is hit here. You lost, right? Now, what I'm saying here is this purposefully created candle is here the smart money involved. So I consider this candle as the order block. I consider this order block. Why? Because they purposefully sold some quantities here, maybe 100, maybe 1000 lots. 1000 lots they sold here. For example sake, I'm saying 1000 lots they sold here, right? And they bought here, for example, 2500 lots they bought here. Okay. Now when you take sell, your stop loss is hit, right? You lost this position here. But I told you guys, smart money also sold here, but they don't place stop loss. Okay, just keep it that in your mind. Right now, tell me, this 1000 lots they have taken. It is in a negative position, correct? This is in a negative position. Yes or no, guys? Yes. And this one will be profit, right? This one will be profit, right? Okay, just keep it in mind. Okay. Now, also tell me, guys, when you see this strong bullish candles, so retail traders will be entering, correct? Retail traders also will be buying here, 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 here. Yes or no, guys? They'll be also buying here, right? Retail traders also will be buying here. Yes. So they'll be placing stop losses, or they don't place stop losses. They'll be either place stop losses, they don't place stop losses. Now, this 2500 lot placed by smart money is profit, but along with this smart money's position, the retail traders also entered here, right? So they are also capturing this down movement, up movement, which is created by smart money. Smart money put their 2500 lot in the market. They increase the price, but here the price chasing retailers, they entered by seeing the momentum candles, without putting any effort. They are not giving, they are just entering their position by seeing the big candles, right? So smart money, what he is doing, he is bringing the price down by taking their stop losses first. First, they are taking their stop losses. If they put stop losses, they're taking their stop losses. If they don't put stop losses, then they're taking entire capital. Entire capital. The account will be blown. So slowly they are taking their stop losses, and finally, what they are doing, they are bringing the price down to mitigate the order block. Why they are mitigating? Because they sold 1000 lots here, right? They need to close this position. They sold 1000 lots here, they bought 1000 lots here. They'll be closing their positions here, or maybe they'll be still holding that position. They sold here, right? This is a negative position. This negative position, they are converting this negative positions into positive. So as soon as it's touched here, they will be closing this position. They will be closing the sell position. Just remember what I said, you guys. When you sell, right? When you sell like this, what is your stop loss? Buy order, right? What is your target? Buy order, right? Correct. So when they sold here. They sold in this candle, right? Again, price came below and they closed this position. They closed this position, which means their target is achieved or their stop loss is achieved. They closed these positions. So when they close 1,000 lots, it becomes 1,000 lot sell order becomes 1,000 lot buy order, right? So I sold here 1,000 lots here in this area and I closed my 1,000 order means I am buying, correct? I'm selling 1,000 lots here and I'm closing my 1,000 lots here, which means I'm buying 1,000 lots. So that is the reason the price gone up because they are closing this position. So which means they are closing their sell position, which means when they are closing sell position, the sell position becomes buy position. That is the reason this big up move is happening. So we should not chase the price. We should wait for the price to come our level. This is our level. And when it comes here, we will be buying from here. So in this case, we are not chasing this price. We are logically trading. If you take entries here, you are chasing the price. But if you are taking entry here, you are following the smart money. There is a difference between following and chasing, right? So yeah, we are patiently waiting for the waiting for the end price to come here, and will be buying from here. Yes, they may be still holding their 2,500 lot. They may be still holding, or they may be closing some 500 positions here. They can do this. They bought here 2,500, right? They may sell here also. That is the reason this down movement is happens. Okay, they may sell here, for example, 500 lots. So they'll be booking 500 lots profit here. Out of this 2,500, they'll be booking 500 lots. That's why this down movement is created. And as soon as it's touched here, they'll be closing this 1,000 lots here. 1,000 lots here, right? They'll be closing the 1,000 lots. Okay. So which means now the 2,000 lots still exist, and addition to that 1,000 lots is added. So will be around 3,000 orders has been placed. That's the reason prices gone up. No, see, the smart money don't have the margins at all. For example, I'm saying, suppose you are having 500 crores in your account. You can free to use that money. You don't bother. You can do whatever you want. So if that option you are having, in that case, what will be doing? Will you place stop loss? You have the 500 crores in your account, and you don't need to worry about. You can do anything, right? In that case, when you purchase stocks or purchase currencies, will you place stop loss? No. Even then, nowadays people not placing stop loss, right? Even though they have 1 lakh rupees in their account, they take entries simply. They don't place stop loss, right? They are doing. So there are certain people. I think you guys also doing that, right? Some of you guys also doing that. So that is the kind of privilege they are having. If you see Goldman Sachs, JP Morgan, these companies, these investment companies, they are having huge money, guys. They are having crores of money, right? Warren Buffett, take example of Warren Buffett. Warren Buffett, we are saying that he is the number one investor in the world, right? Why we are saying? Because he has a huge money, huge money. Just take the celebrities on Hollywood, Bollywood, right? They are also having huge money. Anybody have seen the Johnny Depp case? Johnny Depp Amber Heard case, yesterday's verdict. So I have seen that case. Now he won the case, right? So she has to pay $15 million, and around $2 million he has to pay. Right now, just For example's sake, you can say that it's a $15 million. It's a normal money, and the actors like Robert Downey Jr., these kind of actors are getting $20 million for their one film contract, right? So these guys are ordinary celebrities. You may say that they are celebrities, popularity there, etc., etc. That is fine. That's fine. But they can simply make $20 million, $50 million, right? With after the end of one film, they can able to do that. Right? Then where they will be putting that money? They will be putting that money in the investment companies. Okay, yeah, of course they will be buying properties. They'll be spending that money. How extreme you can go? You have too much of money piling up with you, but what else you can do? You bought luxurious car, you bought luxurious apartment, you bought villa, you have everything. Then what else you can do? So they will be investing. Where they'll be investing? They will be investing with companies like JP Morgan. They'll be investing like Goldman Sachs. See, if you take one single actor, if he can able to deposit or he can able to invest $10 million, then just think about companies like Reliance. They are also having the investments. They are also having their investments also taken care by different companies. Okay, so they have huge money. So they don't worry about the stop losses and all, because they know that they can simply create a bearish movement. They can simply create the bullish movement. They have the strength. Okay, so they don't have the free margin and all. They have the money and they have the power also. And politicians also having crores and crores of money in a Swiss bank, right? Black money or white money. Okay, so yeah. Okay, Ajay sir is asking, in mitigation point, there is a bearish candle. Can we consider that as a candle as a OB? Yes, you can consider this as a OB. Now, yes, there's a very good point. Now tell me, guys. Now I'm deleting everything. I told you that this is my order block, right? Because it's the last bearish candle before bullish movement, right? Now, you can consider this as also order block, right? This is also order block because it's also broken the structure. This is called as a, this is not a, in a terminology wise, it is called as a propulsion block. Okay, this is my order block. This is my propulsion block. People used to say the propulsion block. Order block within an order block. Order block within an order block. So it can consider the propulsion block. Okay, so you don't need to worry about this. You can still call this as a order block. OB. Okay, so you can still expect price come here, and from there you can take buy and take. Right? Clear, guys? Everyone clear? Now, I have one more thing to cover. Now, this is 1 hour time frame, right? This is 1 hour time frame. What you can do is, you have marked a 1 hour order block. You can go to 15 minutes, right? So go to that same order block. This is the order block, right? In this 15 minutes time frame, you can look for the last bearish candle. Now, I can say this is my last bearish candle. However, can you guys see the big candle? These candles are inside this candle, right? Inside these candles. So what you can do is, you can consider this as your order block. Okay. Similarly, you can see here this big red green candle. This green candle is almost equal to this red candle, right? So what you can do is, you can take this green candle alone, like without considering the wick. upside wick. You can take like this. You can refine like this. You can take entry from here. As I told you guys, you can take entry from 50% level also. Okay. In this case, where you will be considering order block here, I can say that this green candle, this is the last red candle. This is the last red candle, right? So you can take this red candle. Also, you can see this, the green candle's wick is lower, right? So you can take like this. This is my order block. Okay, or I'll give you one small hack. Where here, which one is my swing point? Here, which one is my swing point? This is my swing point, right? Or this is my swing point. This is my swing point. Just mark only swing point. Here, which is my swing point? This red candle is my swing point. So, and this also my swing point. This green candle is my swing point. So you can do like, you can mark the both swing points like this, or this like this, or you can take 50% of swing point, extend like this. Okay. So let me give more example. Now you can see here, 1 hour time frame. Let us say we have any, let's see various example. Okay, let us see here. This is my order block. Last bearish candle, bullish candle before the bear movement, bearish movement. Just extend this, right? There's a breakout structure here, right? Okay. Now what I can do is, uh, I can refine this. I can refine this. Then go to 15 minutes. Okay. Now you can see here. Do you guys see the, what do you guys see here? Drop base drop, right? You don't see this drop base drop, right? Can you guys see here? So I have marked 1 hour order block. Inside that, I have marked the supply and demand zone, or you can consider this as an order block. This is also order block, right? Last bear bullish candle before the bear movement, right? You can see here, price touched here, twice touched it, fell down, right? You can do that. You can do this refining thing. Okay, great. No, mitigation block is something different, Farooq sir. Mitigation block is something different. Okay, this is completely proportion block. When you have the order block along with order, followed by order blocks, you can call that a proportion block. Okay, Shobha madam, it is little difficult to confusing understand the stance. Okay, so which one is your confusing, madam? Marking the order blocks or the logic behind the order block? Logic. I have explained that, right? So I'll explain that once again if you guys want, but we have few things to cover. So let me tell you, let me give some brief example. Now, can you tell me this big red candle, can we create this red candle? Can we create this red candle? We cannot create this red candle. We cannot create this external, right? Now, which means this is the smart money involved here. Smart money is involved here. And if it is a bearish movement, why this bullish candle is suddenly popping up? Why this bullish candle is suddenly popping up? It's because they have involved here as well as they have involved here. That is the logic. They created this bullish candle saying that market is going to bullish. So everybody start buying. So they are creating this. They are deliberately creating this. So as soon as you see this bullish candle, our mind will go, okay, till this time market was bearish, but suddenly I'm seeing bullish candle. So everybody will buy. Everybody will buy here, buy here, buy here, buy here. Right? And they also bought here. They also bought here. And next candle, they immediately sold. They immediately sold. And those who bought here, their money is gone. First thing, right? And some guys entered here by seeing this big bearish candle. They said they sold here also. And smart money also sold here. Sold here, right? Sorry, bought here. I'm sorry. They bought here. So they want to they want to clear the negative position. This is a negative position. This buy trade is negative position. This sell trade is positive position. Okay, so that's why they are bringing the price to upside. They are taking all these retailers first, and by the way, and they are mitigating their order block here, and they are closing their buy position. When the buy position is closed, buy becomes sell. That's why the sell movement is created. Okay, now I would suggest you guys to watch this recording again and again and again. This logic is you have to fix in your mind. Only then you can able to understand whatever we are going to discuss tomorrow and day after tomorrow. Okay, so just watch this couple of times. You will get to know what I'm trying to say. If you are still having doubts, you can ping me or send me the voice message privately. I will definitely happy to help you guys. Okay, cool. Yeah, yeah, we'll continue the session, right? Great. Let me go to the this thing. This is the mitigation of block. So I told you guys, smart money buy here, huge lot. Smart money also sold here, huge lot. Okay. So price chasing retailers will be entering here, 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 here. Retailer stop losses, and prices will come down, take their stop losses, touch here and go up. This is called mitigation of risk by smart money. Okay. Now we'll be seeing breaker block. Now I'll tell you guys, breaker block and flip zones are one and same, but it has some difference. The name is a different thing, and here we'll be marking only order blocks. Now, what is breaker block? What is breaker block? Order blocks tend to fail sometime. When that happens, an order block becomes a breaker block. Okay, here you can see this is my order block. It's broke the structure, and price come down, and it's broke my order block. It broke my order block. This is my order block area. It's broke my order block. Now my bullish order block turned into breaker block, which means bullish order block turned into bearish order block. So you'll be selling from here. This is applicable for flip zones also. This is also called as a flip zone. Okay, in the supply and demand concept. Let me show example here. You can see here a breakup structure happened. I have marked the order block. Price touched here at given some points, but after that what happened? Price broken the order block. And after that what happened? Just pay attention to the price action. Price broken the block and touched here and fell down. So you'll be taking sell entry from here. You would have bought your buy entry here, but your stop loss is hit and our block also broken. Then you will be selling from here. Okay, this is called a breaker block, and this is you can also call as flip zones. If you refer yesterday's PDF, you would know that. Okay, now this is my drop, a base, a rally, right? And this is my demand zone. My demand zone is failed. Now it's become flip zone, which means demand flipped into supply zone. It flipped into supply zone. Okay, right? Thank you, Mohan sir. Thank you. Right? Now let's see some examples. Then we'll move to mitigation block. Let's see it on some different pair. GPP, JPY. Now let's see here. I'm having the order block here, right? This is my order block. This is my last bullish candle, right? Or this is my supply zone, right? Drop, base, drop, breakout structures happen, right? Please ensure that we are always looking for the breakout structures. Okay. So this is my supply zone, right? It is worked. It worked to some extent. To some extent, it worked. It given you some points, decent points. I can agree that 270 points, 200, 300 points, etc. It given you, but now it is broken. Now it is broken. But now this market is choppy. Now it is broken, right? So it is kind of choppy. So let us see different example. So this is also sometimes happen. After breaking the block, it can broke like this also. So when that happen, you can say that it's a ranging market. Okay, but in real life scenario, let's see here. Let's see. Let's go 1 hour time frame. Maybe see some clear areas. Now you can see here. This is a perfect area. Drop, base, drop. Right? And you can also say that this is my order block or supply zone. It just take as a supply zone, just it's supply zone, or you can consider this as a order block, a small candle order block, right? Now what happened here? It is respected, but now it is broken, right? It is respected, it fell down. Some points you gained here, some points you gained here, right? Around 900 points it given you. Very decent profit you could have booked from here. And after that, what happened? Price just broken the block. Now it becomes the breaker block or flip zone. Now this is your breaker block or flip zone, right? Now what happened? Just see here the price action. Price gone up, came down, gone up. Right? It given you some points, decent points. It given you some decent points. How much points? It given you 900 points. Again $900, right? It's a 1 hour chart. Okay, so now you can say this is a breaker block. If you go to lower time frame, you will see the difference. Now what happened next? Again it's broken. Now this is no longer valid. This zone is no longer valid. This zone is exhausted. Okay, but you can see here it is exhausted. That's why it's gone up again, gone down, gone up, gone down. Now this is no longer valid. Okay, let's see some more examples. We see different pair. AUD, JPY, AUD, JPY. Let's see this in a 4 hour time frame first. Okay, here you can see here. This is my supply demand zone, right? Rally base, rally zone. Rally base, rally, or you can consider this as a your what do you call it? Order block. It's broken the structure. It gone up. It perfectly worked. But after that, what happened? Just see here. It's broken, right? It's broken. Now you just see here. Price touched this area, fell down. Right now it's become breaker block. Now you can consider. You can take if you are taking entry from here. Yes, it's over. Or buy entry closed, and now it's broken. Now you can say that this is your significant level. From there you can sell, and also you can see There is a drop base drop zone, right? A drop base drop or order block. Now you have two confluences here. I have my drop base drop zone here. Drop base drop zone here. I have my flip zone or breaker block. And you can say this is also drop base drop or bearish OB, right? Right? Now you have two confluences here. I have bearish order block. I mean, I have a flip zone or breaker block here. I have a drop base drop zone or bearish order block here. So when price reaches here, you could have taken entry based on either of these conditions. Right? Clear, guys? Everyone clear with this? Now, don't worry about if you are confusing with this, because as I told you guys, these zones and all for our understanding purpose only. For understanding purpose only, we will be taking trades based on the advanced price action methods. Don't worry. Should I take flip zone entry? Should I take DBD entry? I don't know. I'm confused. Don't ever get that. Don't ever get that. Okay. And you can still say here. Let me delete everything. This is a breakup structure, right? This is my order block, right? My order block is failed, correct? Order block is failed. Now it's become breaker block. What happened? Price touched here, fell down. You can still consider like this also. You can consider this one also. This is my rally base rally zone, right? This, for example, if we take this small candle as an order block, it touched here, it's gone up, and again it's broken. You see, it's broken, and after that price just went up, and from here it is reacted, right? Sometimes it won't touch you, sometimes it won't give you the exact the result you want, but you can still count on it. Now you can see here, you can further, you can see here, let me delete everything. You can see here, this is our order block, right? Bearish order block, breakup structure. Is it failed, right? Is it failed? And after that, what happened? It failed, came down, came up, becomes breaker block. Take sell entry from here. Your target should be this, right? You can see this as a head and shoulder pattern also. Shoulder, uh, shoulder, head, right? Okay. Yeah, a lot of terminology. It needs some time to understand all those things. So watch these videos again and again. Again, see the PDF also again and again, because tomorrow gonna be crazy. I can tell you. I can tell you that it's gonna be kind of crazy. So we'll be seeing markets in a different way tomorrow onwards. Okay. So the thing is, it's up to you guys. You can follow the order block concept, or you can stick with supply and demand. Okay. So if today's topic is easy, then choose this. If yesterday's topic is easy, then choose that. You can try that strategy or try this strategy. Whatever the option you can choose. Okay. And tomorrow we are going to teach you something that you can apply into the uh, supply demand as well as order block as well as. Okay. Okay, no issues. I'll do that. For example, I'm taking daily chart. I'm taking daily chart. Okay. So in daily chart, let's go different way. Let's see Bank Nifty. Some of you guys wondering about Bank Nifty, right? I don't do this. I've deleted everything. Right. Now let's go to daily time frame Bank Nifty. Now tell me which one is, it's my rally, base rally, right? This is my demand zone, correct? Now I know that this is my demand zone, or I can say that this is my last bearish candle before the strong up movement. But let's stick with the full thing. Right? Now, how do I know? When price comes here, I'll be buying, right? But I don't do that blindly. I'll be doing something. But before that, I want to reduce this order block because it's how much point? This entire order block is 600 points. I cannot put 600 points stop loss, which is huge. So I'll directly go to 1 hour. Now I'll see which one is my order block here. In this area, which one is my order block? For that, I'll give you the hack. I'll give you the hack. Just mark swing points here. Untouched swing points. Now, this is my swing point. Everyone agree with me? This is my swing point. Right? It is touched or not? It is touched. Price touched the swing point. Right? So leave this. I don't want this. And this is my swing point. Agree with me? Right? Is it touched or not? Touched. Right? So leave it. And what is my next swing point? This is my swing point, right? Is it touched or not? No. Right? It is not yet touched. So I have refined my order block. I have refined my order block. However, you can still consider, you can see this. This is also my your swing point. You are having swing point here. So you can take entry either of this area based on our Saturday's teaching. Based on our Saturday's teaching. Okay. Okay. You can consider these two areas are key areas to buy. So your daily order block refined it into 1 hour order block. Now you can go to 50 minutes. You can further refine. You can further refine. Now you can see here, this is your swing point, right? This is your swing point. This swing point is touched. It is touched. So I'll be taking this swing point as a key point. I'll be changing the color for this. So I'll be buying either from here, or in this case, this is my swing point from here. Okay. So when price comes here, I'll be buying. So this is how you need to refine. However, I don't suggest you to guys refine over like you can do like this. So H4 order block and M15 refinement. Like that you can stick with. Don't go below that. If you can go below also, like 5 minutes. If you go further below, it will be confusing. Okay. So that's what I am saying, that don't do that 5 minutes refinement and all. So let's stick with the daily 1 hour, 15 minutes. Okay. The same thing you can do in Forex also. You can take your entry from this areas. But this is a little bit hack, but we'll be doing something else also inside this level. Inside this level only, we'll be looking for the opportunities. Okay. So yeah, we'll cover one more thing, then we'll end up in today's session. So this is one more example. Order blocks broken, given some points, but it broken, it becomes breaker block, right? So we have one more block called mitigation block. Mitigation block. Now, before we continue the mitigation block, I would like to tell you guys the shift in market structure. Shift in market structure. Shall we continue or shall we postpone this tomorrow? This mitigation block and shift in market structure, shall we continue or postpone? Continue. Okay. Everyone is okay with, right? Because, okay. Thanks. So USD CAD. Thank you guys. Thank you for that. So USD CAD I have taken. So let's go to the 1 hour time frame. So I told you guys that higher highs, higher lows, bias, right? We'll be finding the bias. Now, everyone agree with me here? It's a bearish trend, right? Everyone agree with me? Lows broken, lows broken, lows broken, lows broken, right? In this area, from this area, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? Now suddenly what happened? Higher high is created, right? There's a break of structures happen, right? Now this is called break of structures. This is called a downtrend. Till this point, it was downtrend, right? Now what is happening here is exactly here. Let us delete everything. So till this level, it was breaking lows, breaking lows. Even here, it's breaking lows, right? Now suddenly what happened? Just see here. It breaking highs. It broken this high. Right? It broken this high. Right? It broken this high. Now, when you see this first instance you are seeing, right? It was a completely downtrend, completely downtrend, and suddenly you are seeing the breakout structure to the upside, and you are seeing upside movement like this. When you see this, when you see this pattern, it can be look like head and shoulder, inverted head and shoulder. When you see this kind of patterns, like it will be look like this. Sorry about the bad drawing. So it will look like downtrend, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher high, then higher low, higher high, higher low, higher high. Now this we call as shift in market structure, SMS. Market structure is shifting to the upside. Till this point, it was breaking lows. It was breaking lows. But this area, it is broken the highs. Not once, twice also it broken the highs. 2 times it's continuously broken the highs. So you can say this market structure is shifting to the upside. From downtrend to uptrend is happening here. Exactly here. So this is really powerful pattern. So we will be trading this using the mitigation block. Mitigation block, not alone. So as soon as you see this, you can confirm that, okay, market is changing the direction. Market is changing the direction, right? Every single reversal point, you can see this kind of pattern. Every single reversal point, you can see this kind of pattern. Every single reversal points, you can see every single major highs and major swing highs and major swing lows, you can see these points. You can see this reversal thing, this kind of thing. It can be in 1 minute time frame, it can be in 3 minute time frame, it can be in 1 hour time frame, it can be in 1 day time frame. But major swings and major swing highs and swing lows, it will be happening. So if you capture this movement, you can able to target till this highs. You can do this. Now, how do I capture this? We'll be capturing this based on the mitigation blocks. Based on the mitigation blocks. Let me show you the rules for the mitigation block, how mitigation blocks will be working. Yeah, it's a kind of Quasimodo, but we are having the different name here, mitigation block. Okay. Mitigation block is formed when market fails to make higher high or lower low after successful retracement. Now you can see here, breakout structure happened. Breakout structure happened, right? So this is a bullish market, impulsive retracement, impulsive retracement, but it did not break this high. It did not break this high. Instead, it just created. Now you can say this is my higher high, right? Higher high, higher low, higher high, right? Now what is this? Anyone tell me what is this? Lower high. This is my lower high. Now, technically, if it is a bullish movement, technically the price should have broken this structure and it should have continued to go like this. But here, it just created the lower high, right? And after that, it just fell down. Now, when this happens, you have to mark. This impulsive move is not broke the structure. It's not able to broke the structure, right? So this you can call this failed to broke structure. This is failed. This movement is failed movement. So I'll be marking this area as the mitigation block. So price will come down, come up. From here, you can take sell entry. Now this is kind of difficult for now, but I can tell you that by practicing this, it will give you the more effective trades. It will give you the more effective trades. Okay, right? Now, similar to this, you can see here. Let me clear everything. Now you can see for the bearish example, market was going down. Market was going down. Let's create lower low, a lower high, right? And lower low. It create lower low. After that, lower high created. And after that, what happened? It created the higher low. So now from here to price shifted to here, right? So from bullish bearish to it is shifting to bullish. So that's why I'm calling this as a SMS, shift in market structure. Now technically this should be your order block, right? Technically this should be your order block because you will be selling from here. You thought you will be selling from here. Price will be breaking like this and it come here. It will be selling from here, right? Breakup structure, but it didn't happen. It didn't happen. Instead, just created the higher low and it broke the structure and it created the higher high. Now this is your mitigation block. Price comes here, touched here, corner. Okay. Now let me show the example, then I'll ask you guys if you have any doubts. Now you can see here, there's a breakup structure, right? Breakup structure happened, and technically this would be your order block, right? You'll be buying from here. Price went up, and technically, what should have happened? What should have happened? After breaking the structure, I told you guys, once structure is broken, let me see. Once structure is broken, once any structure is broken, here is structure broken. I told you guys, market is bullish, right? Then what should have happened? It could have come here, and from there, it should have gone like this. It should have broken one more structure, but it is not happened here. It is not happened here. Instead of that, it didn't broke this high. Instead of that, it fell down It fell down and created the lower high here. Lower high here. Right? It should have created the higher high. Technically, it should create the higher high, but instead of that, it created lower high. Now, again, it's broken the structure to downside. Now, this is my order block. I mean, this is my mitigation block. From there, I'll be taking my sell entry from here or maybe from here also. Okay, clear, guys? Let me share this in a chart. Let's see, we have the example. Let us see here itself. Let us see here itself. Let's go, let's mark this first and go to lower time frame so that we can see. Let's mark this entire area. I will go to 50 minutes so that you can see the proper. Okay, now you can see here. Here, what happened? Just see here, guys. Price was breaking the lows. Price was breaking the lows. Sell trend, right? So you will be marking this as your order block. Yes or no? This is your order block, right? This is your order block. But what happened here? Your order block is broken. Not only order block is broken, you also broke the price. Also broke the lower high. It created the higher high here. Here also it created the higher high, right? It created a higher high. So here, this area, this particular area, it successfully it created the impulsive move, and it did not created the retracement. It successfully created a retracement, but it did not gone below. It did not gone below, right? So this area is technically your mitigation block. Now price go broken again, touched the mitigation block, this area, right? Mitigation block and gone up. Okay, SMS. This is your SMS. It is shifting, right? You can say this is your SMS. The entire area is SMS because you don't have to see the proper lows here, right? So this is a bit confusing for now, you guys, because it's kind of confusing for everyone. Just practice order blocks and breaker blocks, because the thing is, these blocks works really well, but don't worry about those concepts, because I told you guys we'll be taking the entries based on advanced precision method. So in that case, your zones are not matter. Your whatever the strategy we are going to apply inside the zones, that is matters. Okay, so this is your mitigation block. From there you can take your buy entry. Yeah. Yes, Kadir, you can say that it depends upon the market to market. If you are trading the Bank Nifty daily, choose daily 1 hour 15 minutes, and 15 minutes you can choose your order block, right? If you're trading Forex market, I would suggest H4 and H1 M50 or H4 M15 5 minutes. Also you can choose refining purpose. Okay. Yeah. Okay. So far it is clear, guys. No worry if you are still not if you are still confusing with these concepts. No worries. I'm still telling you. Even you can use your support and resistance, and you can trade with the strategy which I'm going to teach you next coming Saturday. Okay. I'm not saying that you have to follow this order block thing. You can still use the supply and demand. If you feel that I'm not getting this concept, I don't want to do this, then just keep the order block. Just stick with the supply and demand. Okay. But if you feel that supply order blocks is looking good for you, then you can choose order blocks, right? So I'm not gonna compel you guys to learn both these strategies. But the thing is, you can use the words. You can use the words. You can mean supply and demand zones as order block, or order block as a supply and demand zones, because more or less everything is same. The logic is different. The logic is different, right? I personally use order block. I don't use supply and demand zones. I don't use rally based rally drop based drop. I don't use that. But I know that, okay, this is rally based rally pattern, this is drop based pattern. So I can place here entry, here entry. You can also mix. You can also mix. Okay. And if you ask me, what I'm personally using is what I'm gonna teach you guys tomorrow. That is what I'm personally using along with this order block supply. Order block supply and demand zones are my third preference. My third preference. My first preference is what I'm going to teach you tomorrow. That is my first preference. My second preference is market structure. My third preference is order block and supply preference. Okay, so it don't have the in the place of supply and demand zone order blocks. You can use support and resistance zones. You can use support and resistance line in the place of order block, in the place of supply and demand zones. Okay, but order block has some logic. Order block has, so that's why I personally prefer to use order block. You can confluence with breaker blocks with rally and breaker block with order blocks. So most of the time you'll be having confluence. So here you'll be having breaker block. At the same area you'll be having order block. Nearby order block will be there. So in that area you can say that it's a most powerful zone. These are all will come by practicing, guys. These are all will come by practicing. Now I can tell you that should I need to follow the breaker block? No, you don't need to follow the breaker block. You don't need to follow the flip zones. You don't need to follow the mitigation block. That is not required. You can simply follow rally based drop, and supply and demand zones and order blocks, bullish order block, bearish order block. That is more than enough. Nowadays, I'm not even using breaker blocks. I don't use breaker blocks. I don't use mitigation blocks. Okay, I only use order block, bullish order block, bearish order block. That's it. Because I know when price reaches that order block, I know what I have to do. Whether it is a valid order block, whether I can take trade or not, I know that. I know that strategy. So in that case, I don't worry about order blocks. I don't worry about mitigation block. I don't worry about breaker blocks. But as a concept, you guys should know this, because most of you guys, some of you guys beginners also, right? So you need to practice this. Only then you'll be understanding those things and all. Those things and all. Right? So yeah. Tomorrow session will be really important session, and day after tomorrow, Saturday session, also very important session. So these two sessions, I can tell you that it will give you the different approach to view the market, and every single time you can able to take trades without having the fear. Yes, sir. This I see. I tell you guys, I have I have studied supply and demand from my mentor. He taught me for free, but I have learned this order block thing and few more things. Whatever I can tell you that whatever I'm gonna learn, I'm gonna teach you guys. I have learned this from one African guy. I told you guys that I have paid $1,000 for that. $1,000 multiple times, like $200, $300 like that. And that guy was 20 years old at the time, and I was around 29. That guy was a student, and I was really ashamed to learn from this guy, because my ego was saying that this guy is just 19 years old, 20 years old, and I'm around 29 or 27. I'm not remember exactly, 2 3 years before. Okay, now I am 34. Okay, so I was ashamed to learn from this, especially from the Nigerian guy. I don't have any racial bias, but we know that Africa is a poor country and there are a lot of gambling and some sort of things will be happening. There are cheaters like that. We heard Nigerian guys, especially Nigerian guys. So I have learned from you. Okay, I have practiced this more than I can tell you this. It took me for almost 3 months to grasp all those things. 3 months it took me, and after that I have improvised my strategy. I have improvised my strategy. Okay, so that improvisation, it took almost, I have did it first. I learned this in forex market and applied this, and I made profits, I made losses. There are mix and losses and profits, and after that I applied this in the bank nifty. My first priority was bank nifty, and I can tell you guys that I can tell you that it works amazingly in the bank nifty. Amazingly in the bank nifty. Not only for me, there are so many people that are taking trades using this strategy. I know some of the community where I have been part of. So they used to take trades. Amazing trades you can take in a bank nifty. Yes, of course, you can apply this in any currencies, any stocks, any markets. John sir, I can tell you that you don't need to use any indicator. You don't need it. Only thing is, if you just follow my words, if you just follow what I'm going to teach tomorrow and after tomorrow, that is more than enough. I can tell you that still I'm insisting you guys that you can still make 800 points in a day, even in a bank nifty. I'm saying I have made 800 points in a bank nifty. Maybe you guys also would have achieved that, but I have like it's like 1:35. So my risk was this much, only this much risk, and within one trade, not even a couple of trade, within a one trade, I have made 800 points in an expiry day. Not even expiry, sorry, I'm sorry, it's not an expiry day, before the expiry day. Okay, expiry day, it is possible, but before the expiry day I made in a futures segment. And this happened couple of times. One time 800 point, one time 600 point, and after that I got feared. Because it's also emotional control, right? So that part is psychology part also really important. So I was holding that question, even I had a great fear in my heart, great fear in my heart. So uh, after that I decided that my wife told me that don't take too much pressure. Yes, it happened after making these too much profits, and the next day I lost. Next day I lost. I have to say that also, because I waited for price to go up, but it given me 400 points, and my stop loss, and I didn't last. My stop loss is hit, and I end up with 300 points. So I was completely disappointed because I was expecting 500 points. It went up to 400 points. I could have exceeded my position. I did mistake by and by after that I end up with only 250 points. So I was really sad. And that time my wife told me that she was a teacher, so she used to teach people the psychology and also music. So she told me that don't take pressure, just aim, you can do this, just aim only 200 points. You know that you are successfully making 200 points every single day, so stick with 200. Why are you too much greed? You're making good money now, so why are you doing this? Like that she advised me. Yeah, so I take her advice, and I have changed um, my style of viewing market. 200 points is more than enough, even in a bank nifty. So yeah, yes, I put trailing, sir. I trade with trailing stop loss. Every single market I trade, I put trailing stop loss, especially in the forex market. Yes, sir. Fear will be part of game, sir. I cannot even I have the experience. I still fear because it's money involved, guys. Money involved. Not only my money. If it is my money, I can adjust. I'm trading with other people's money also. So I'm responsible for to. I mean, I'm responsible for their money. So I cannot afford to lose. So that is a one thing. It is depends upon the capital. Like sometimes I take 3 lots, 4 lots, like that. Sometimes I take only 1 lot because capital is 1.5 lakhs if you require it, right? So It's like every month I used to collect from like 3 months, once in a 3 months, I used to collect from the money from my relatives and I'll make profit. And once in 3 months, I'll settle the profit with them and I'll return them with their capital also. So like that I do. And prior to that, I was working under the property risk. So where I managed the clients, I used to manage the clients. So yeah, that experience only given me this business idea. So I'm doing that right now also, only for Bangalore. Sir, FTMO, I can tell you tomorrow strategy will be really works. And of course, you'll be combining this strategy with tomorrow strategy. Tomorrow strategy will be really, really helpful for you guys tomorrow and day after tomorrow strategy. Okay. So yeah, you can use this FTMO. And I can tell you that don't always don't look for only FTMO. You have so many opportunities. Today morning, I got yesterday evening in our March month batch, bootcamp batch. Few guys, one guy called Pradeep. His name is Pradeep. He cleared challenge called TCT. There's another platform, TCT. I never heard about this. And one of his friend cleared MFF challenge, my Forex fund challenge. Okay, there are so many platforms available. Don't restrict yourself with FTMO only. There are so many platforms available, right? So you can choose that also. So he given the message. Let me show you guys that message. I'm not lying here. Let me go to my WhatsApp. There are people, guys, you have messaged me. I'll be responding. Just see the March month. I think everyone can see this. I have given your rocking message. You can see here people are applauding. Happy to share that. I got one more live account for my Forex fund, but this is of my friend post completion of TCT account live. He gave me this agreed to with 50%, and I already made $1,700 in one day in USD. One day he made this. Yesterday he also sent me this message in this group. You can see he got the $10,000 account. He got the certification. This is a certificate. His name is Pradeep Verma. You can see Pradeep Verma. He got the certification. He got the $10,000 real account. Got the live account after passing 2 phases in TCT. There's a platform, right? So yeah, there are so many platforms available. You can choose any one of them. You can try and work out this. So it is possible. It is possible for everyone to make money in the Forex market. And for that, you should have the emotional control. Emotional control is the main thing. That's why I'm saying don't trade gold, don't trade silver, don't trade while news events are releasing. Right? Trade only Euro USD, trade only GBP USD, because these two pairs more than enough for making daily money. Okay. Just target 200 points. Don't look for the 400.5. Yes, you can look for that, but in the beginning stage, restrict yourself with 200 points, 20 pips, and put only $20 account, $50 account. Open only $50 account. Don't crazily invest like $100, $200. That is not okay, right? So yeah, with this we're clearing today's session. If you guys have any doubts, you can speak with me or you can type in chat box. Then we'll be going to the assignment part also. Do you want to speak with me? You can raise your hands, or if you want to type, you can type. Okay, let me unmute Utish.
Hello, sir. How are you?
Yeah, I'm good. I'm doing well.
Sir, so I have this doubt that now
Mhm.
we are trading. So we bought in the MT4.
Mhm.
So until and unless we close the thing, we don't lose any money, right, sir? Or do we lose anything?
Uh, for example, you were
Like
saying,
like in MT4, we have this demo account where it's given something is given as free margin something. like they have given us 10,000, and then
Right.
they have given a margin of 10,000, free
Mhm.
margin of 10,000. That is keep on decreasing and increasing. I didn't
Yep.
understand that part yet.
Okay.
So if we have a real account or something like that, like for $20 itself,
Mhm.
so we bought a mini lot or micro lot, for example. So the price is going down,
Mhm.
like the loss is almost like for like if the loss crossed $20 for me,
Mhm. Mhm.
will my money go off, or I could
Yeah.
wait until the
After yeah, after losing, see, the price is going keep on going down. If it is go below 20, then
Mhm.
your account will be zero. Your account definitely will
Okay.
be zero. Okay, and it will not
So
go negative. That
okay.
that you can understand. So you need
Okay.
not pay more than that. Whatever it's, if it is goes below 20, if
Mhm.
it is goes below zero, then everything will be zero. Your account will be zero. Okay.
So in the demo account we have 10,000 USD. That's why even if we go like minus, then we could recover up to the plus. Is that
Right,
the case?
right. Yes, absolutely
Oh.
correct. And the people also, those who are trading without stop loss, they'll be having
Mhm.
huge money, right? 1 lakh, 2 lakh rupees. So they
Mhm.
won't put stop loss. Even if
Mhm.
it is goes down,
Mhm.
they have the margin and they have the capital, right? So it will give them support, and eventually price will go up, right? When price goes
Yeah.
up, they will close their position. So
Uh,
people do like that. That is not a way to do. Okay.
okay. So that is how the smart money is doing, right, sir? Like they have huge capital to protect them, even if the prices goes
Yes,
down.
yes, yes, yes. Absolutely correct. They have the huge capital. Even they take sell position,
Mm.
and immediately they buy. They see, there will be two set of analysts will be there in the smart monies.
Mm.
Say for example, if you take investment companies,
Mm.
how they will be doing is they'll be having sell side analyst and buy side analyst.
Oh.
So they'll be having different two departments.
Mhm.
So, for example, buy side analyst will be only taking buy entries. They don't care about the uh, market goes down, the market goes up. They don't care about that. They will be buying at certain prices. And remember one thing, guys: smart money will not trade based on reading the candlestick charts. They don't see the candlestick chart. Okay, so they will be trading based on data, fundamental data, and the candlesticks data, open, close, higher price, lower price, based on their data and based on certain factors, they'll be trading. Okay. But traders will used to watch the chart, but they don't trade based on charts. They'll be trading. They are having different methodologies to take trades. So buy side analyst will be taking only the buy positions. Say for example, if you are seeing, if I am a buy side analyst, I'm working under JP Morgan. In that case, uh, my superiors will be giving me the instructions. So you have to buy at this price, this price, this price. So I'll be buying, irrespective of market goes down or goes up. I don't see that. I'll be buying based on that certain parameters. Similarly, the same office, they'll be having sell side analyst. So they will be also be part of the market, same market. So they will be also selling. They will be taking only sell trades. Okay. So these two guys never discuss each other. He is a buy side analyst, he is a sell side analyst. By the way, they will be taking the market. So they don't care about the money. They will be having the limitations, like you can lose up to this $1 million. You can lose up to this $1 million. So within that range, they'll be making money. They'll definitely make money. So yeah, they'll be holding positions for months and years also. They will not day trade. Just remember that also. They will not day trade. Even they watch the charts, they'll be watching the charts of monthly charts and weekly charts only. They don't see the 1 minute chart or 15-minute chart, and they don't day trade. They'll be
Oh.
whatever their swing trade or positional trading.
Mm.
Okay. So that's why they can able to hold their position for longer period because of their money involved.
So in the forex market, there is no spot trading, right, sir? Only futures is there, or is spot also?
Uh, you, see, this is, you can consider this as a spot market. I can tell you that this Euro USD and GBP/USD. I cannot say this is the futures market.
Mm.
You have the Euro futures. There's a separate. I mean, Euro USD. You can say this is a spot market. You can consider this as a smart market, but you have separate Euro futures. Now let me go to the trading view. I can show you that. So if you search here, grow. Okay, go to futures. You have Euro futures here. So this Euro futures is derived from the Euro USD movement. So this is a derivative market. This is the futures market, and in that case, you can consider Euro USD as a spot market. But I cannot say it is completely spot market. You can see here there is a Euro USD future. This is also there. So we cannot completely say because it has two currency involvement, right? So you cannot clearly say that that is a spot market, but you can consider. But if you take XAUSD gold, this is I can tell you that this is a spot market. I can tell you this is my spot market. But if you type gold, you have gold futures in MCX. You will be having gold futures in other countries market also, right? These are derived from XAUSD. These charts, these future charts, this is derived from the XAUSD. Okay, this is not a gold chart. This is a gold future chart. And what is the spot? Gold spot. Gold spot is I can say that XAUSD is a gold spot. Okay, USD is a gold. This is a gold spot market. You can consider, but I'm not sure whether it is a spot market or not. But I can tell you that gold M6 gold chart is derived from here. Okay. Yeah. See, there are different. If you ask here, if you ask me here, there will be different sources here. Euro, USD. You put here, you can see FXCM, Oneida, Forex.com, IDC, right? I can tell you that I will be using only these three: FXCM, Oneida, and Forex.com. These are, I believe that these are the major brokers, and also these are the major liquidity providers. There's a term called liquidity providers. So they will be providing I mean, they will be having some brokers like OpFX, like XM Trading. So they are actually handling the money. They are also giving the brokerage service. They are actually handling the money also. So that's why I consider these three as a major. I will be seeing only these three charts. Okay. Okay. On source of trading view, we will be having so many sources here, but my personal preference is these three: FXCM, Oneida, Forex.com, and sometimes I can use IDC also. Capital.com, Saxo, these are all things also good, but there will be some difference, minor difference will be there with these charts. So this is the three standardly followed by most of the traders in the world. Okay. Okay. Anyone want to speak with me? Let me see. I think everyone is exhausted, right? Exhausted with the concept which you are learned today, right? Let me unmute Abhiram sir.
Hello, sir.
Yes, sir.
How are you, sir?
I'm doing, sir. I'm doing well, really well.
Yeah, today's session was awesome, sir. One thing, but I want to know that how to structurally analyze the market, sir. Because yeah, if I open any chart, sir, suppose now consider GBP, JPY, and first, what all things I need to do, sir, in order to consider the market?
Okay. Simply saying, I'm taking. Yeah. Tell me, sir.
Okay. First thing, what I need to do is I need to look into a daily chart, right, sir?
Right. You need to go daily or 4 hour. It's up to you.
Sir.
Okay.
Yeah, I will be doing intraday trading, sir. So,
okay.
Yeah, I need to go for daily chart. Then I need to look into a breakup structure, right? So in daily
yes, chart. Absolutely.
Okay.
Now let's see here this chart, USD JPY. Now I'm here, right? Exactly, we are here. We are here. Now, what is happening here? We can see here there's a break of structure. There's a break of structure here also, upside also, downside also. But now what I can say, price is going up. It is going up. Today's candle is kind of bearish. Because it's bearish, it's because of some other reason that I can explain tomorrow. So I cannot explain today. You can capture this up movement here.
That is a
Capture this down movement. Something happening here. So I'll explain that tomorrow. So let's take different pair. I'll explain how we have to do. Let's take GBP USD. Now, first thing is I have taken daily chart. Okay, yesterday we have put this entry. I don't know what happened. Let me delete everything. Okay. First thing, I'm seeing this chart on a daily time frame. Right here, today morning, what happened? Today, yesterday, what just happened?
Market was coming down. Yeah.
Yes, it was broken, sort of broken the structure. Now, I told you guys, whenever the structure is broken, price will come down and then go up. Similarly, whenever the structure is broken downside, price will retrace and go down. Now, this is what happening here. It is broken the downside and it is retracing now. It is retracing now. Upside movement is happening. So yesterday you have seen this. Yesterday you have seen this. This is yesterday's candle. Let me go to, let me delete everything. Let me go to yesterday. I saw, this was yesterday's candle. I saw the break of structures happened here. Now just consider this as a break of structure. Even though it is not a break of structure, you can just consider this a break of structure. Okay, it has happened here. Now I know as soon as it's broken the structure, price will retrace. Price broken the structure, retrace and continue to downtrend. This is what my expectation. So I'll be looking for selling option from here. First thing is I'll be looking for selling option from here because it's a rally base drop.
Okay.
Right? It is not a proper one, but for example sake, I'm saying it is not a proper breakup structure. It is not a proper one. Example sake, I'm saying. So I'll be looking for selling option first. Number two is I'll be looking for a buying option from here also, because I know it is broken the structure, and I know that after break of structure, price will go up, and then only it will come down. I know this up movement will happen. So I'll be looking for buying option from here. So for that, I'll go to maybe 1 hour. Let me delete everything. So I'll be looking for buying option. So my first preference is sell, and I'll be going to 1 hour and I'll be looking for the buying opportunity. Where I'll be looking for a buying opportunity? In 1 hour, I have seen one order block here. This is my buying opportunity, number one. Number two, I'm having one more order block is creating here. Right? It is breaking the structure here. Right? So price will come down. I'll be buying from here and price will go up. I'll close my buy position here and I will take my sell position from here. As when price touch this level, and I'm looking for the buying opportunity again. And from somewhere here, I'll have one more order block. I'm looking for selling opportunity. So this is how I will be doing. So you can do this in a 15 minutes time frame also. So if you see here in a 15 minutes time frame, I have already got a range market here. So rally kind of base, okay, you would have purchased from here. And you can aim at least to this level, or maybe at least to this order block. So likewise we'll be doing. So this is just a glimpse I have shown you. So Saturday we'll be learning all those things, how to do multi-time frame analysis. I'll be teaching that. So how to take, when you take a chart, how to analyze from top to bottom, from bottom to top. So every single piece of information I'll be teaching you guys. So for now I have given you some glimpse. Okay.
Yes, sir. Okay.
Thank you, sir. Yeah, Utisha, you can speak. Okay, let me take Umesh, and then will speak to Utish. Umesh, Mr. Umesh. Umesh, sir, I have given you the permission.
Yeah, am I audible now?
Yeah, I can hear you.
Okay, so sir, actually, I was having one trade on GBP USD only.
Mhm.
Yesterday, I bought it at near about 740, 125, 740. And yeah, I took 3 or 4 trades. So three went into the profit, and fourth one was like, it was a falling knife that we discussed yesterday.
Yeah, okay.
Okay, so like looking at the daily candle, it was completely red. So I was expecting more down movement today.
Okay.
But now the thing is, even I was expecting that it will move to 125, 100, 200. And I put the pending order at 124, 700, which is today's low. But due to fear, I deleted it just because looking at the daily candle, it was like, it should continue the downward movement only.
Okay.
But it reversed completely. So why it happened, I'm still not able to get.
Okay.
Even in the 4-hour chart or 1-hour chart, the candles were like not satisfactory, or it was nothing like that. It will give this much reversal today only. So I was expecting this in the next week, not today.
Okay.
Yeah.
So I can tell you, sir. I can tell you one thing. You can able to capture this up movement. You could have captured this up movement. I can tell you that by using our different strategy, and you could have taken this down movement also. Now you can say that you don't have any zone here, right? You have one zone here, drop zone, but it's still
broken. It's broken, yeah.
But tomorrow we are going to learn how to take this entry from here. You will not take entry from here. Tomorrow I'll be teaching how to take this one, how to anticipate this one, how we'll be taking this trade. That I'll be teaching. Similarly, you can say here there is kind of breakup structure here, right? It's not a breakup structure, but it's a daily time frame. If you go 1 hour time frame, you can see it's a breakup structure.
Yes.
Correct. So, but it is not a breakup structure. It is something else. So when you see this happening, you can able to take this buy entry also. But here it is not happened. It is not yet happened yet. So sometimes you may not capture this sell movement. Sometimes you may not capture this buy movement. But technically, using our tomorrow strategy, we will be doing that.
Okay.
You will be taking this sell entry without any confusion, without any problem. Similarly, you can able to take the buy entry also, but it is not in all the cases. But sometimes you can take. Sometimes it may like go like this, straight away vertical line, vertical movement, or straight away or something like this. If it is this movement, maybe we may not capture. But if you see this kind of movements, then we can able to capture. We can able to capture this down movement. We can able to capture the up movement also. So I can promise you that tomorrow you will be learning that.
Okay, so luckily I exited this position today because just now it came to my price. So,
okay.
And yeah, one more thing. I forgot actually what I was.
Okay.
Okay, so my target was 127,500 and
127,500. Okay.
500 in GBP. Okay, so in longs, and even looking at the monthly candle, which is kind of morning star. So I was sure that I will get out of this trade without getting into the loss, because I am just having one micro lot in $80 account.
Okay.
So I was not afraid, but yes, the thing is that I was not able to capture the fall movement and even the reversal movement, and I missed a good profit. So that was the issue.
Yes, I can give you guarantee tomorrow.
Okay.
Based on the tomorrow strategy, you can able to take
Mhm.
any I mean, especially from the higher time frame perspective, I'm saying. For example, you are having the 4-hour candle, and whenever you see certain levels and whenever certain things happens, we can able to capture the quick movements every single time. Quick
Okay.
200 points movement, quick 300 points movement, that
Okay.
we can able to capture. So wait till tomorrow.
And sir, from current studies, can we identify that it is going up? Like looking at this chart, the last
Yeah,
setup.
yeah, I can tell you that based on this 4-hour strategy, I can still tell you that the market is bearish, even though it is broken the structure. I can tell you because I'm applying all those strategy. I'm telling you that
Okay. Okay.
how I am telling that even though it is broken the structures here, it's broken the
Mhm.
structures here, and
Yeah.
here also it's
Previous
broken the
low.
structure,
Yes.
right? But still something saying that I'm in a still in a bearish moment. It maybe happens from here,
Okay.
right? Because of I'm seeing something here, something here, something here. Okay, so that's why I'm saying it may go, but here, from here it can go still uh, bottom. It can still go below,
Okay.
but we will be capturing this up movement also, and we'll
Mhm.
be capturing the down movement also.
Okay.
Yeah, yeah. Okay. So let me see. Yeah, Uti sir, I think you can. I'm giving the permission.
Hello, sir. Yes, sir. Sir, in today's class, I didn't get mitigation block, sir.
Okay.
Uh, and and we also learned about breaker block, no, sir.
Mhm.
So, should we take trades, or should we wait until it hits the breaker block, sir? I had this doubt.
Okay. This is my,
Okay.
for example, this is my demand zone.
Hmm. Okay, sir.
Demand zone. It worked here. Okay, no issues. It will work here. Let's see. Anything failed? I can say this is failed, right?
Yes, sir.
This is failed.
Yes, sir.
This again also failed. First time it failed.
Yes,
Second time it
yes, sir.
came here, but it touched here. You can see.
Yes, sir. I
Mhm.
touched.
So
Hmm.
it given you some points. It this
Hmm.
especially it's a 4-hour candle. So when you go
Hmm.
to 15 minutes time frame, it given you some decent points.
Hmm.
There is no denying on that. From here, it is touched. It given you
Hmm.
around 300 through 300, 400 points. It given you 300 points. It given you,
Yes,
right?
sir.
So yeah, you can able to capture this one,
Hmm.
small down movement. But now you can
Yes.
see what is happening. It's again broken.
Again going breaking. Yes, sir.
Now you can see here.
Hmm. It again touched.
First time it's broke the order block. It becomes
Hmm.
breaker block, and
Yes,
it
sir.
becomes selling order block, right?
Hmm.
Second time it broken again the sell zone. I mean
Hmm.
selling order, I mean bearish order block, and it came
And
back. It became bullish order block.
yes, sir.
So you can do this. You can buy from here. You can sell from here. Probably you may miss this huge movement, super movement, right?
Yes, sir.
But if you see here bottom, just see here, it is still order block, but it didn't give you the proper breakup structure. That is the reason
Hmm.
you may not taken this entry. You may not
Yes, sir.
taken this, right?
Hmm.
But yeah, there is a possibility you can take this entry also by
Hmm.
using our different logic. We'll be
Okay,
taking
sir.
this entry also. So by the way, you can able to capture this down movement, this up
Hmm.
movement also.
Okay, sir.
Regressively, you can do this. Okay, breaker
Oh,
blocks also sometimes fails like this. But even if this fails, you
hmm.
can take entry from here. But
Oh,
after
hmm.
this, if it is break like this, then you
Hmm.
can completely
Le-
avoid this zone.
Okay, sir.
Similarly, the mitigation block,
Hmm.
mitigation block is a bit confusing because we'll be
Hmm.
looking for something look like this.
Yes, sir.
Okay,
Either
so
should come to the
in
lowest
this
and
case,
go.
yeah,
Yes, sir.
this
Yes.
is your order block, right? This is your
Yes,
order
sir.
block.
Yes, sir.
Breakup structure happened. This is your order.
Hmm.
Similarly, this is also your order block.
Yes, sir.
Breakup structure happened.
Hmm.
So now what happened? This order block is failed, right?
Yes,
Now
sir.
it's become it broken. This order block is broken, and it become, you can say this is a breaker block. It
Break
becomes
the block.
right?
Yes.
Now what you can say here is there is a market structure is shifting.
Yes, sir.
Market structure is shifting. So
Hmm.
technically what should have happened is it should have happened.
Yes, sir.
It should have happened, but it didn't happen.
Hmm.
It didn't happen. Instead,
Okay.
it touched here,
Hmm.
and for it's a breaker block example. Let me tell you for order block, mitigation block. So in mitigation block, how it will be working: downtrend,
Yes, sir.
downtrend, right?
Hmm.
Downtrend, and this is my order block.
Yes, sir.
Order blocks is respected.
Hmm.
Okay, respected, but it did not broken the low. It
Hmm.
retraced,
Hmm.
gone up.
Okay.
Okay,
Okay, sir.
it touched here,
Hmm.
respected and gone up. Here in the previous example, I have given you guys
The
uh, like that I have told you, right?
yeah.
There's a difference.
Yes, sir. Hmm.
There's a difference
Yes.
between this one and this one. So
Hmm.
now you can say this. This is your, I mean, this is your mitigation block. From here you can
Mitigation.
take it.
Okay,
Same
sir.
thing, but here you didn't get the what do you call it? You get the retracement, but after that, um, this down moment is not broken the structure.
It didn't break the.
Yeah, here it is directly
Hmm.
broken this high. So there is a small difference between these two.
Oh.
Okay. It is
Okay.
bit confusing. I can still say it is bit confusing. So please avoid this. If you are getting confused,
Okay.
don't need to worry about this thing. You can stick with this one,
Okay.
right? Because
Okay. Hmm.
we are not gonna take buy entry directly from here. Without blindly we are
Hmm.
not gonna take buy entry, or blindly we are not gonna take buy entry from here. We'll be seeing something here. So
Okay.
it doesn't matter you are marking this level or not, whether correct or not, wrong, doesn't matter. When it is touches, you'll
Okay.
be seeing something, only then you'll take trade. So that's why I'm saying this is not significant at all.
Okay. Okay,
Okay.
sir.
Yeah. Thank you. So anyone want to speak, or anyone has any doubts? Okay, I think some of you guys still having trouble in understanding, I guess. Yeah, someone is speaking. Yeah, yes, absolutely correct, Mohan sir. You need to practice a lot, and you need to watch this recording again and again and again. Okay. Absolutely, the money management concept will be there, sir. Saturday session we'll be discussing that. We can have a recap of all the classes in the video from. We'll be seeing that. We'll be recall all the information we have learned. The thing is very simple. So what we have learned so far, we have learned the market structure first of all, right? Market structure means when the price should be creating impulsive moves and retracement, and when price breaks the structural point. Here structural point is nothing but swing points. Right? When it is broke the structure, we can tell you that market is bullish. So we can expect price will retrace a little bit and it can go from here. From where exactly it can go? It can go from the demand zones or the order blocks. From the order block, it can go up, right? So market structure is the key thing first, and second we'll be marking our order blocks or supply and demand zones. And when price return to our demand and supply zone, we will be looking for the buying opportunity, right? So these demand zones and supply zones have different patterns, like rally based rally, drop based drop, rally based drop, drop based rally. Similarly, these order blocks has different types, like bullish order block, bearish order block, breaker block, mitigation block, right? And we will be there is a slight difference between supply and demand zones and order blocks. Supply and demand zone is purely price and economics based, supply and demand based, and supply and demand concepts which really works well in the market which has the volume, right? But whereas in the order block is the concept which is completely developed based on the smart money perspective. Why smart money is creating the order blocks, why prices are going up, why prices are going down, and see who is responsible for the impulsive moves or strong violent moves, and who is responsible for the retracement. Simply, smart money is responsible for these movements, right? So that difference we have studied. Right? So far we have studied market structure, supply and demand zones, and the breaker block and order block thing. Right? Yes, yes, you can speak. Hello. Someone is speaking. Okay. Someone has raised the hand. Someone want to speak with me? Okay. I get it. Right? Okay, Mohan sir, you got taken demo account, right? Great. Let's see which is given you profit or not. Umesh sir, this I can tell you one thing to everyone. See, the concept look applying the concept look may be difficult for you now, but if you practice at least for 2 weeks, 3 weeks, or maybe in 1 month, I can tell you that this you will not see any other strategy, even in the supply and demand on order blocking. You will not see any other strategy, and you will not use any other indicator. I can guarantee that. So yeah, it's kind of difficult. I can understand that you need to practice. Practice gives you the confidence, right? So yeah. Okay, shift in market structure. Shift in market structure, it's pretty much simple. I told you guys, market has expansion, contraction, expansion to downside, right? You are having impulsive retracement, and you are having the ranging market here, right? Now, shifting market structure works like this also, and it works like this also. Expansion, right? You are continuously seeing that highs are broken, and your low is not yet broken, but suddenly you are experiencing that low is broken. Suddenly here you are experiencing the low is broken. Now you can conclude that market is getting reversed. Market is reversing because it's broken the low. At first time after long period, it is breaking the low. So now you can say that Market is shifting its direction. Shifting its direction. So you'll be looking for the, for example, here you will be having the order block. This order block now act as a what do you call it? This mitigation block. Mitigation block. You'll be taking your sell entry from here, or you can look for one more confirmation here. You can take sell entry from here also, some here or some here. Okay. Similarly, in a ranging market, like this, uptrend, ranging market, suddenly range breakout, retracement, breakout. Now you can say market is shifted here because it's broken the lows, it broken these lows, right? So market is reversing its direction. Now I'll be looking for selling opportunity. I'll be either looking for selling from here in this level, from this level, or I'll be looking for some zone here. From here I'll be looking for selling, or maybe I'll be having one more zone here. I'll be looking for sell from here. So this is called shifting market structure. Okay. Yes, mitigation block, shifting market structure. If we are not talking about zones and all, we are talking about structural shift. Now, as I told you guys that when highs are broken, you are saying that it is a bullish market, right? But from where you need to buy, you'll be buying from either from this demand zone or from this demand zone. Similarly, the buy trend, when will you conclude that buy trend is over? When will you conclude buy trend is over? Buy trend is over when you see this. It's kind of M pattern, right? When you see this, now you can conclude the buy trend is over. Now you can take that, you can take entry from here or somewhere else. Entry part is completely different. I'm talking about structural point, structural part only. Okay. Great. Anyone want to speak? If anyone want to speak, then we can speak, or else I think we can wrap up the today's session. Okay. So let me see. Thank you guys. Give me your feedback also. I know that today is overloaded, right? So you guys are you guys have some paralysis, but it will be rectified. It will be rectified. Okay. So I'll share the assignments in the group and try to do the assignments. And I have seen all of your assignments today also. And yeah, it's really good. Everyone have the done correct thing. I have seen everyone's screenshot. Okay. Yes, sir. Patience gives you the money in the market, guys. So patience is really important. Yeah, working is the improvement. Yeah. Yes, I'll do that. I'll share you guys one single chart, possibly by tomorrow morning. Maybe I'll give some live charts also, so that you can take demo trade based on my. I'll give some signals if possible. Okay, so I'll give some signals. You can take buy or sell entries based on that, and you can see how the way I'm analyzed. But the thing is, still I need to give you the masterpiece. So that is the reason. That is the reason I couldn't able to share in the charts. Okay, but I'll be do that. No worries. Okay. Thank you guys. Thank you for being patient, and please give the feedback. Akshat, I think Akshat will be sharing the feedback on. So I want your valuable feedbacks, and I'll be sharing the PDF. And yesterday I forgot to share the PDF, but today straight away I'm sharing the PDF, and I'll be sharing the assignment also. Okay, and as usual, please wait for the recording because it's now 10:30. It will at least take 2 hours to processing the video. So you'll be getting by 1 o'clock. I'm really sorry for that this long session, Akshit. So it's making you making your time also. It's taking your time also. I'm sorry for that. Anyways, it's for people's advantage. That's the reason it's taking time, right? Thank you, guys. Thank you. We'll meet tomorrow session, and tomorrow please be present, all of you guys, because tomorrow going to be the important session, and day after tomorrow also. Thank you. Let's end the session. Bye, guys. Bye. Take care.
Yeah. Thank you, everyone. Thank you, sir. Also, kindly fill the feedback form as well and let us know how was your experience for this session. And I'll share the same form over in WhatsApp group as well. So